So I want to believe you open the materials. All the materials I've been sharing. Make sure you open it with you now. Then after that, as you are, I believe you have gone through the question. So if you have any question, get ready. Sorry, I'm trying to attend to someone. Okay, so you have gone through the material I shared on the platform. Just chat me, let me add it to the platform. So I believe you have questions or whatever. As you go on also, you will ask your question. So let it be interactive. If you have done case study before, use that, ask every necessary question, what you encounter during your time, the last time you wrote case study. Then others will also learn. Then you can also give advice based on what you have encountered or what you have experienced, maybe previously when you wrote your case study. So it's going to be an interactive one, but I'm going to tell you necessary thing we need to do first. So let's go back to the first thing. In case this is the first time you are joining us, we have done analysis and preamble of the case on YouTube channel. And that was general class. Okay. And we discussed and we introduced the necessary information you need to know about the case. So we talk about what are the things you need to do and what are the things you are not expected to do. So let's start from just a brief one. We started from pre-scene. What is pre-scene all about? And after that, you also look at the mark allotments, the way they allot mark for each exhibit, assimilation, structure, and the light. What are the things they expect you to do? Then the 20 marks we said is for executive summary. Then we also said 10 marks is for what? Is for ethical issues. But in the requirement, they will not ask you to do anything like ethical issue, but they are expecting you to identify it yourself and then make sure you give solution to those ethical issues you'll be seeing. Then after that, we look at what are the aspects of ethical issue we are talking about? Professional independence and then objectivity, conflict of interest, doubtful accounting and creative accounting, unethical business or commercial practice, inappropriate pressure to achieve a reported result. All these have been treated in that first scenario or in the first class we had. Then we also talk about the exhibit. Now, in this case now, in pre-scene, they only gave us 4 exhibits. Let me try to see those who are online. Sorry. I want to see those who are missing out. 7490. Please use your real name so that I think 7490. Use your real name. Samsung, use your real name. Some people are not here. Mr. Taufik is not here, Rita is not here, and all of them like that. If you want to join, you just have to, this case study, this pre-scene is very vital. Let's continue anyway.
Sam here.
Oh, okay, Rita is here. Okay, fine. So if you look at this pre-scene now, we have 4 exhibits. But that's not going to be the end. By the time you get to examination hall, you are going to see additional exhibits. And it can be like 5 or 6. Do you understand? So they are going to load you with different information. Do you understand? But all this information they are going to give you, they are going to be relevant to what you want to make. So in that exhibit, you are going to see business proposal there. You are going to see additional financial statements. For, here they gave us 2021 and 2022. Definitely they are going to give you 2023 financial statements. So it will also be part of the exhibit they are going to give you. Then Based on this trend and based the way this case is going, they may likely give you region financial statements, or they may give you division financial statements, or they may give you what again, units department, the financial statement. So they're going to give you more information on the financial statement. They're going to give you information about business proposal. The business proposal is going to be the requirement 2. Requirement 1 is going to be the financial analysis and the like. Okay. If you have any question, I'm seeing some people dropping it here. You can unmute yourself and ask. Let it be interactive. So I may not have that time to go back to the chat box to see. Please, I can hardly hear your voice. Is that true? He is audible enough. I can hear him clearly. Okay, so it means it's from you. Kindly check your mic. So it means that complaint is from your own end. So we have 4 exhibits here. So they are going to give you additional exhibits. Okay. So if you look at the first exhibit, it's talking about the requirements. If you join physical, can join online to see what I'm sharing. Do you understand? Do you have the link? You've chatted me, Abby. Okay, so sorry, let me just attend to this person very quickly. Okay, Sadiq. Okay. Sorry, oh, please, people. So you can join online so that you will see what you are trying to share. Okay. Let me just re-forward everything once again. Okay, we are good to go. Okay, so we have this requirements, and you can see the requirements from what I'm sharing. So preparing detailed financial analysis and report on performance of the firms, hospitality clients, analyzing your client's financial statement to identify area of weakness and preferring likely solution to correct the abnormalities. I've discussed what are the weaknesses they are talking about. Okay, the weakness they expect you to mention when you analyze using this liquidity, using the efficiency, using this profitability, you identify all the weakness or as many as you can find. Then assessing operational and strategic business proposal. This one is not yet given yet, but definitely they are going to give you in the unseen. So they are going to give you business proposal. What you are going to do with business proposal, they will give you. Do you understand? But we are still going to predict what are the likely things to come out from that proposal. Assessing the client financial and business forecast. The way I'm looking at this forecast too is probably going to be in form of budget or forecast or whatever. But let's still hold on. Assumption upon which they are based to form judgment, conclusion, and recommendation to the client. Advising your client on their strategic tax planning strategies for optimal tax liabilities. Drafting reports, that is the most important thing. After calculations and the findings, you must make sure you draft the reports. And we have done the report as well. So let's move on. That is Exhibit 1. Exhibit 2 is talking about the company history, business structure, strategies, and models. Then Exhibit 4. Exhibit 4. Exhibit 3 is talking about the markets in which conventionally operates. or spicy operates. Then exhibit 4 is talking about the financial statements for 2021 and 2022. And that is where unseen, that is where it stops. Now, let's go to the business proposal. What are the likely things you are going to see? Yes, the business proposal. Once you get to examination hall, this business proposal will likely be to exhibit 6 or 5. Your requirement. You can mute the mic. So the requirement will likely be the exhibit 5 or 6. So as you can see here, I have 5 different type of business proposal that we are likely to have in our case study. Now, once you see that unseen, go to where you can see email from Julius Idumudia to John Adeshola. That is where the main requirement will be. So Julius will send a mail to Adeshola John. And what is going to be, this date may not be the same thing, but it's going to be to John Adeshola. Subject may not be the same thing. The date may not be the same thing. But from Julius Idumudia to John Adeola, you are going to see something like that, live and direct. And this is how they are also going to form that exhibit. As you are aware, the next board meeting at which the company's performance and strategic plans for the coming year will be considered is in 2 weeks. At this meeting, the board will review the performance of each of the strategic business units. So it now depends how they want to put it. If they want you to do geographical, do you understand? If they want you to do business unit, if they want to do division, if they want to do product by product, they will put it in this requirement. That is what is going to guide you on which one am I going to calculate my analysis on. If they want you to do it on geographical performance, they will give you Lagos, they will give you Abuja, they will give you others. You will do ratios analysis on Lagos, on Abuja, and on others they are going to give you. If they want you to do based on business units, what are you going to do? They will give you information about business units. Your calculation, your ratios will be based on analysis based on the units. If they want you to do division by division, they are going to give you information about financial statements, financial performance of each division. You will analyze them like that as well. So that is the key area you are going to identify what they want you to do under this exhibit. Are we getting that gist now? That is first thing. Then, whether to go ahead with the decision on diversification of product portfolio. That diversification of product portfolio is the business proposal. Do you understand now? Is the business proposal. So if their business proposal is going to be based on diversification of products portfolio, they will put it in that area. They will put it there like that. If it's not going to be on that, if it's another something, maybe they want to invest in something, they will put it there. From there, you're going to see, you're going to understand what they want you to calculate as financial analysis and what they want you to do as a business proposal. Are we getting that gist now? Now, therefore, I would like you to carry out number 1. That is your requirement. I said, during our revision or during our pre-scene analysis, the first class we had, I said they are going to give you 2 requirements. This is where you're going to see requirement 1. Requirement 1 will be in this format. A detailed review of the strategic business unit, if they want you to do business unit, or a detailed review of the strategic business geographical performance, if they want you to do that, or a detailed review of the strategic business division, if they want you to do division. Whatever they mention there, that is what they are going to base on. But how, if you want to do that, if this is division, you will do division 1, division 2, and don't forget to pick the group, the whole company as a whole as well. If it is geographical, if you do Lagos, you do Abuja, don't forget to do the whole company as a whole as well. So if I want to do it, and don't forget that your ratio must be in tabular form. By the time we get there, I'm going to show you that. So you do Lagos, you do Abuja, and you do company as a whole. For those who have done transfer pricing, you know how we used to do it. Division A, Division B, then company as a whole. So you will see the effects of all, but that is for financial analysis, like ratios, like liquidity, like efficiency ratio, like investor ratios, and the like. Now, nothing, you can see that I put it from performance from 2021 to 2023. They are going to give you information about 2023, no doubt. Noting the trend in performance and returns on capital invested. You are also to carry out a review of the geographical performance of the companies for the period. This is how it should be, but we are only predicting. It may not be like this, but I'm just giving you basic understanding what you need to know if they frame it in another way, and what they want you to do if they frame it in another way. Now, requirement 1 is talking about what? Financial analysis. Requirement 2 now is not talking about the business proposal. This is where you're going to be looking. We'll be looking at investment appraiser. They're going to be looking at merger and acquisition. You'll be looking at corporate failure and then restructuring. What we have done in SFL. It can be anything in PM or in SFL. Are you getting that now? But we are going to play around what is likely to be their business proposal. So requirement 2 now, an evaluation of diversification of product portfolio projects. Your appraisal should cover the 2 phases. That is, if they are giving you 2 phases of the project, and provide advice to the board on whether to go ahead with the project or not. Also indicate whether the company should stop at phase 1 or projects or should to implement the two phases. That is, if they are going for diversification of products. Are we getting that now? They may decide they want to go for another product like bread. They want to go for another product that is medicated. You know, this confectionery products are not that healthy. So maybe they want to diversify into something that is healthy for people to be eating and stuff like that. And what are the likely things they are going to put? What are the likely costs? What are the likely information you are going to see? We are still going to look at it as we move on. Are we good to go? Okay, so this is how they always put it. I attach here with exhibit 6 to 9 or 5 to 9. Anyhow they put it, don't be bothered. Further information about what? About Nigeria economy and business environment. Details about the companies, its strategies and sustainability practices, and available in the file in the office. So it means likely information they are going to be giving you, everything they've mentioned here will be in each exhibit. Exhibit 1, Exhibit 2. Exhibit 1 can be about sustainability practices. I mean, sorry, we have done 1 to, they have given on 1 to 4. 5 can be sustainability. 6 can be the requirement. 7 can be business proposal information. 7 or 8 can be financial information for 2023 and the geographical business unit or division. Exhibit 9 can be what? Can be business environment. Do you understand? They are going to give you information exhibit by exhibit. Each exhibit are very vital. You must make sure you go through it. But you are not expected to get to examination on that day and start reading pre-scene again. So you must have mastered pre-scene before you go for exam. So you get there, you are opening, you are just flipping through the pre-scene and you are going straight to where? On scene. And start reading from there. Because you have 15 minutes to read and then you start working. Please just remind me about the time allotment I want to talk about. Time allotment, how you need to time yourself. Okay, so we've discussed about this. Please draft for my review a report to be submitted to the board. Your report should be comprised of, who do you think is talking here? Please draft for my review. Who is talking here? Who is talking here? Is it the board? Is
The
it
supervisor. The supervisor.
the supervisor is the one talking? You do media is the one talking here. You understand now? Please draft for my review a report to be submitted to the board. Your report should comprise of the following. So it means you want to draft the reports on behalf of who? On behalf of your supervisor. So you will write the report assuming he's the supervisor that is writing the report. So the supervisor will only check the reports, review it, do the necessary correction, and send it directly to the board. So you as a junior or as a trainee, you are not in that position to send the report to the board, but your boss, your supervisor, has that right to send to the board. So you are writing on his behalf, but when you write on his behalf, he doesn't need to sit down again and start writing that report. He will only just review what you have written and then do necessary corrections. This one is an external report. Do you understand now? Because you are writing it, you are reporting it to the third party. Okay, so let's continue. So a review of the strategic business units, that is based on what we are suggesting now. Performance from 2021 to 2023, noticing the trend performance and the light. Then an evaluation of diversification. So we are going to be looking at different area of that diversification business proposal. So it won't be only diversification we are expecting. They can go into other ways. So we are going to look at every area. Okay. Also indicate whether the company should stop at phase 1 and the like. So that is how that exhibit is going to be. And that is the key exhibit in that case study. That is the key exhibit. It must be there. Other may not, they may draft, but this one, this is how it's going to look like. Just make sure you look for it. I look forward to receiving your draft reports. Now, what are these likely business proposal that they are going to give us? Number one, it can be diversification of product portfolio, like I said. Because you may not be able to predict them like that, but at least we will move very close to them. You cannot get it figure per figure, you cannot get word for word, but it will be very close to what they are expecting you to do. Now, when you're talking about business, when you're talking about diversification of product portfolio, what are the likely things they are expecting from you? The proposal is going to be introduce new confectionery products beyond chocolate, such as ice cream. They have not been doing ice cream, such as cakes and sugar confectionery, to cater to a broader range of customer preferences. That can be their business proposal. Now, what are the possible costs you are going to see there? You are going to be seeing R&D, because they are going to do research, and in their exhibits, they also talk about that they did what they call they normally have I don't know what happened to my sorry, my mouse is not moving, so that's why I'm trying to adjust that. Okay, let's go this way. So they may ask you to do the diversification of products. And what are the likely costs you are going to see? R and D is going to be there. That is, they are going to give you possible costs, research and development. They will need to do research and development. Okay? Then they can put it anyway. Research for new product formulation and recipes. You know, they will need to look at what are the ingredients they are going to use. So this could be the necessary cost they are going to look. But anytime you see research and development, before or at the initial stage of the product, that will be expense of. Do you understand? That will not be part of the initial outlays. For those who have done PM very well, investment appraiser, it will not be part of the initial outlays. Then testing different ingredients and production methods. That one is also sunk cost. Either they go for that product or not, they cannot recover that amount again. So it's a sunk cost. So it will not form part of our initial what? Initial outlays. I believe you are getting that. So it will not form part of our initial outlays. I want to believe Mr. Taufik is here. I don't think I can see him. Okay, he's here. Okay, so these are the possible costs. Now, when we are not talking about but this first one, this A part of the cost, they are going to be expense off. You don't need to add it to the real outlay of the project because it's not relevant in decision making. Either you are going for that product or not is a sunk cost. Then number B now, production equipment and facility. These are the things you are going to have as a real cost. Acquiring or upgrading equipment for ice cream production. So if you are going to get new machine or equipment to use, that will form part of the initial outlay. Then additional baking ovens. If you want to get additional baking oven, it's also going to be part of your what? Of your equipment you are going to use. So it will form part of your initial outlays. Specialized equipment for sugar confectionery. That will also form part of your what? Part of your initial outlay. So if I want to have my initial outlay now, it's going to be $100, $80, and $70 together. Then I will discount it from year what? From year 0. I don't think I need to do all this calculation. I believe you all know what I'm trying to talk about. Now, but if you want me to do it, you can still tell me, oh, but I believe you all know this simple investment appraiser. Then C part. C part now, they can now give you different kind of raw materials to use. Ingredients and raw materials. Procurement of Sorry, what do you say? Okay, if you want me to do it, don't worry. At the end of the class, I will just use like a 10 minutes or 20 minutes to explain the calculations. So you're also going to have ingredients and raw materials. Procurement of ingredients and raw material for initial production. That one will be other costs you are going to be having in year 1. You understand now? Then ongoing costs for ingredient and supply, variable. All this raw material, variable. If they give you variable, if they give you raw material, if they give you labor. All these are what? They are variable costs. And variable costs also need to be considered when you are doing your investment appraisal. Are we good to go now? But we are going to see, for those who attended our normal pre-scene, you will see that we have done something like this in the class, just like last diet question, the way they solve it. So we've solved that particular question like that in class. Okay. Now, the next one is D. D is talking about marketing and promotion. They can give you cost about marketing and promotion as well. Launching marketing campaigns for new products, $60. Advertising and promotional materials, $40. They can also give you information about this. So we are going to look at how I think I need to solve that first one to give us idea. So don't worry. at the end of the class, but I want you to understand what they want you to do first. So distribution and logistics, they can give you information about that too. All this information are relevant for decision making. It's only the first two that are not relevant, research and development. Every other things are relevant. Then they can also give you information how they are likely to generate the revenue. So we can be having projected sales revenue from ice cream. It can be per year, it can be per month. If it is per month, you multiply it by 12 if they want you to do it per year. Do you understand? Don't forget, make sure you read every line of their information in details. Projected sales revenue from cake, this. Projected revenue from sugar confectionery, 200K. So you will add all this revenue together and take it away from the total cost. So whatever you have is going to be your net present value. You will discount it. They will give you the discounted figure. If they did not give you discounted figure, you will do return on investment. How do you calculate return on investment? We are going to discuss everything. But definitely they will give you return on investment as a percentage in the question. So you will need to use that. Okay. We also have increased customer base. Expected increase in customer base due to diversification product offering 15%, current annual revenue, additional revenue for increased customer base, and the like. And by the time you are done with that, this is return on investment calculations. How do we do the return on investment? We have net profit over what? Over total cost, multiplied by 100%. So from here now, what is our total net profit? Our total revenue minus our total cost will give us our net profit. Yes or no? Then from there, we get our net profit equals to $900,000 minus $590. We are going to be having $310 as our net profit. So to get return on investment is going to be how much? The net profit over what? Over total cost. What is our total cost? 590. Multiplied by 100%. So it means based on this scenario we painted now, return on investment here is what? Is 52.54%. So in case they did not give you return, they did not give you cost of capital in the question, they did not give you any information about return on investment. It's something you can calculate yourself and use this figure to discount your information. Are we good to go? Let's continue. That is prediction 1. Another prediction we can have.
Question.
Okay.
So you said that if they did not give us cost of capital, we will use this return on investment percentage to calculate it. Is that what you're saying?
To discount it.
Okay, to discount it to the present value.
Exactly, to the present value, then you get your MPV. But it's likely that they are going to give you cost of capital if they are bringing something like this. The big part is gross profit margin. What do you mean by gross profit margin? Gross profit margin simply means total revenue minus total cost of goods sold, Abi. Then whatever you get there, we give you gross profit margin. So normally your gross profit margin, the formula is gross profit margin, gross profit over total revenue multiplied by 100%. Yes or no?
Hello, sir.
So,
hello,
yes,
sir.
Yes, sir.
Hello. In this case that you are not giving the discount factor, will you assume it?
I'll just explain it now. In a question, when they don't give you discount factor, that is the cost of capital, you will use the return on investment, what we just calculated now, the way we calculated it. Do you want me to stroke back to where I showed what I just explained now?
Yes, sir.
Yes, sir.
Look at it here. Can we all see this return on investment?
Yes.
So this 52.54% will be used to discount if they did not give you cost of capital. But make sure you look at it very well. and make sure they did not give you cost of capital. If they don't give you cost of capital, just do something like this to get your cost of capital, get your return on investment, and use it to discount it. I believe I'm clear now. So let's continue. So I believe you all know what gross profit margin is talking about. Gross profit margin is talking about gross profit over total revenue multiplied by 100%. So if you look at this now, to get your gross profit, it simply means total revenue minus total cost of goods sold, which is the same thing we give you gross profit. It's like we are still repeating that. Then if they want you to do break-even analysis, okay, they can do, yes, they can put it anyway. So in case they can ask you to do break-even analysis on this to calculate the number of units or sales volume needed to cover the total cost. This helps determine when the company will start generating profit from the new product portfolio. What are the formulas for break-even? To get CM, to get your contribution, what do you get? That is revenue minus variable cost. Revenue minus variable cost will give you contribution margin. Then, for you to get your contribution margin, sorry, that the first one will give you contribution, number contribution. Then, for you to get contribution marginal ratio, what do? It's going to be what? Contribution over sales. It can be contribution per unit over sales per unit, or it can be total contribution over total sales. How you want to do? I'm still going to share information about break-even analysis as well. Then another one, don't worry, I'm going to make sure we solve this question one first, so that I will give you idea of what is likely to happen. Then they can also go into market share growth. So we have monitor changes in market share compared to competitors to assess the impact of the product, diversification of the company's position into confectionery market. Okay, so this calculation provides insights into the potential cost, revenue opportunity, and return on investment associated with the diversification of the company's product portfolios. Let's go to the next one. The another thing they can talk about is market expansion through distribution channels. You know, the first one they can talk about is product diversification. Now they can now say, see, they want to get more customers. You know, they are only operating majorly in Lagos and where? And Abuja. They now say, okay, they want to expand.
I can't hear you anymore. I can't hear you anymore, sir.
Don't get lost.
Is it network?
Are you sure you can't hear me online? Can you hear me?
We are hearing you
Yeah,
now.
we can hear you now. You just lost in transmission.
Okay. So sorry about that. Maybe network, sure. Okay, so the second prediction would be this market expansion through distribution channels. Establish partnership with new distribution channels, such as hypermarkets, convenience stores, and specialist retailers to reach a wider audience. Maybe they want to start selling it to international markets, to abroad. So they need channel. They need that distribution channels to do that. They may decide they want to create something like Amazon. They want to create something like Konga, like Jumia, so that everybody can buy from internet and get whatever you want to get. So they will not give you information. They will give you necessary information about that particular about that decision. Now let's look at it one after the other.
Mr. James,
Yes.
it's like your focus is on requirement 2, Abi.
Yes, we are on requirement 2 now.
You see, you know what happened in last diet? When a student prepare for normal ratio analysis, and when they go to the exam, they gave us something different. They gave us information on nationality and all that. But if to me, we face that kind of challenge that came out.
I didn't get your question.
I said that. Hello?
I didn't get your question.
Can you hear me? Can you hear me now?
Yes. Just
I
ask the question.
If the focus is on requirement 2. Hello? Hello?
We can hear you. Please
Hello?
proceed. We can hear you.
Yes, I say it's like you are focusing on requirement 2. I say you should equally pay attention to requirement 1, especially what happened last time.
Just follow the class first. Don't worry.
Okay.
End of the class,
Okay.
I'm trying to say. So what I've been discussing this morning is I've discussed requirement 1 already. I said it's going to be financial analysis. And that financial analysis can be geographical, it can be division, it can be unit. I've discussed that already. That anyhow they put it, this is how you are going to do your calculations. But I've done necessary requirement 1. I've done calculation for requirement 1 already. That is the Excel sheet I share with you. So I'm still going to share that Excel sheet with you. But let's look at this requirement 2 extensively first, before we now go back to that ratio analysis. So market.
But excuse me, sir. Excuse me, sir. I think the person that just asked question, I got his question. What he's trying to say that, like, from the material you sent to us, we are assuming that the requirements will be, the first requirement will be to calculate our normal financial performance, which is like profitability, liquidity, efficiency. But his own question is that, like, class diet, they didn't ask for requirements. One was not profitability, liquidity. It was based on geographical. Yes, if it is geographical. So that's his own question, that we should not channel ourselves to profitability, liquidity only. That's the question.
I think you got what I wanted to say.
Hello, sir. Yeah, what he's trying to say is right, but then at the same time, last day they actually asked for profitability as well. But what they are just saying is that instead of us calculating for the business as a whole, we should calculate for the strategic business units, that is those ones in the geographical area. I think that's why they are mixing it up. It's still the same thing, but it's just that they want us to calculate a different, same thing, but in a different way.
Your voice is not coming out.
I don't think he's online now.
Can't hear you, sir, please.
What's going on? I can't hear anything.
He's not online. I guess his network is.
I think his network is.
I think his network is actually.
Okay, back.
Hello, class. Please, let's try to mute our mic. All questions should be at the end of the class so that we will not disrupt the class. All your question, put it at the end of the end of the class. By the time you see at the end of the class, I will have answered all your questions you want to ask. Because I have planned myself the way I want to I want to outline all the information. So please don't let us disrupt. If you have questions, write it somewhere. Yes, thank you so much. Unmute your mic, please. Okay, so let's continue. So I'm still on requirement 2, likely requirement 2. I'm still on likely requirement 2. Okay? And we've talked about the first one, which could be diversification of products. Requirement 2 can, the another one can be expansion of distribution channel. And this could be the normal cost we are going to see is negotiation and setup cost. Then you're going to see contractual agreements and legal fees. System configuration for order processes. All this will be the normal cost you are going to see. Join online so that you can see what I'm sharing. Are we good to go? Then B part is talking about logistics and transportation. So transportation call for initial delivery. And don't forget what IAS 16 says. Any delivery cost must be what? Must be capitalized as part of the asset, Abi. Then warehousing expenses. If it's going to be monthly, you are going to multiply it by 12 to get the total cost for the year. Then inventory management system setup. How much is it going to cost you to put this inventory into place? You must also make sure you cost that. Then we also have marketing and promotion, advertising, promotional materials, in-store promotions and displays, marketing and campaign stores for each channels, training and support. All this will be there. Then what will be the suggested? Slotting fees or trade discounts. So slotting fees for hypermarket. If you want to start putting your product there, what are the amounts you are going to pay? All these necessary costs will be available for you. Then trade discounts for convenience store, 5% of sales revenue, specialist retailers, partnership fees, all this will be there. And by the time you add everything together, you get your total cost. Then your total revenue, there's going to be, they can tell you that by doing this, by going for expansion distribution channel, your revenue will increase by what? By 20%. By so amount. So it means if you want to do your quota revenue now, it's going to be the normal revenue you have increases by 20%. Then current annual revenue, 1 million naira. Additional revenue from increased sales volume, $200,000. Market penetration, estimated market penetration, 10% of new distribution channel customer base, average annual spending per. I'm going to do the first calculation and you use that idea for other one we have it. Then diversification of revenue streams. We can be having revenue from hypermarkets, from convenience stores, from revenue from special retailers. Okay? Total revenue would not be from distribution channel. Total distribution channel you have. You know, before they have franchise, they have outlets, and they also sell on contract basis to companies, to corporates. You gather everything together, given to you. You add them together as total revenue, total cost. Then you do your normal necessary appraisal. Then what else can we do? Let's go to return investment again. If they want you to calculate your return investment, it's going to be net profit over what? Over total cost multiplied by 100%. So you know how to get your net profit. cost minus revenue or revenue minus cost divided by the total cost. So cost per acquisition. So total customers acquired. You must look at the market penetration, customer base of new channels, total customer acquire, which is equal to 10%, customer base of hypermarkets plus the one you are going to get from the convenience stores, plus the one you are going to get from the specialist retailers. The total, then total cost over total customer acquired. Okay, if it is going to be incremental revenue per channel, they can tell you it's going to be in form of incremental revenue. So to calculate the total revenue generated from each new distribution channel and compare it with associated cost to the shared growth. Monitor changes in market share compared to competitors to assess the impact of the market expansion on the company's position in the industry. Now, this calculation provides a quantitative assessment of the costs, revenue opportunity, and potential return on investment for the company's market expansion through new distribution channels. That is two. Another one that they can also come out from is enhanced online presence and e-commerce. You know, in that case study, they said they are into technology. They take that technology very serious. The first one is they do research every time, and they like going into new products. That is why we pick diversification of products. The second one, they said they have different channels of distribution. They can say they want to increase the distribution channels. That is two. Third one is technology they are into. So they can say they want to go into additional technology, better technology that will be able to reach the whole world or wider range. Now, this proposal is going to be in this form. Invest in technology to strengthen the online sales platform, optimize the website for user experience, and introduce innovative features like click and collect services. They have started that click and collect services before in our pre-scene. So they may decide to develop it. They may decide to go for that. So what are the likely costs you are going to incur on that? Technology investments. They will need to upgrading e-commerce platform. They have click and collect before, but they may need to upgrade it. They want to add additional features to it so that we'll be able to reach wider people. Then implementing click and collect features. Website optimization for user experience. They will add all these costs together. Those are the costs that are directly to that development. And development is going to be what? It's going to be capitalized. It's only the research that will not be what? That will not be capitalized. Research is a sunk cost, but development is a real asset, intangible asset. And according to IAS 38, intangible asset. So you can also go to that intangible asset and read it more about it. But from the day when the management are sure that this thing is going to work. Do you understand now? Maybe they can put it in this way that click and collect, they have been developing it from the past 2 years. They have been doing research and development on that click and collect from the past 2 years. But when you now see one of the exhibits in Unseen, they will say management are now sure, are now confident that click and collect can start from next year. Haven't considered the following costs and the likes, or can start this year. Haven't considered the following costs. You will now start capitalizing those costs from that point. Do you understand now? Marketing and promotion. If they don't want to go for technology investment, they can decide to go for marketing and promotion. They'll be going up and down to do the marketing, which is not ideal, but we can never tell. Digital marketing companies, they can be using digital marketing companies to do all these things for them. They may want to get space under Jumia. They may want to get space under Amazon. They want to get space under one big digital marketing company. Do you understand? To start selling their product. You will calculate all the costs associated with it. Then search engine optimization. That is, if you just go to that platform and you search for any product of spicy, you will see it. You'll be able to pay and collect. All these are costs you need to consider. Training and human resources. Training employee for online customer support and hiring additional staff for e-commerce management. You will calculate all these costs and consider them in your calculations. Logistic and fulfillment. Setting up logistic for click and collect services. Okay? That is another one. So what would be the revenue? How would they get revenue? It can be increased online sales. They have been into online sales before, but revenue can now increase by 30% of what they have been getting online. So what do you do? What do you do? If they have been getting 20 million from online, you will increase that 20 million by what? By 30%. So it's going to be 20 million times 1.30. Or it can be 30% of 20 million added together will give the increase. Okay? Then current and
Hello? Hello?
I think it's network.
Ah, okay.
you now add it together with that 500,000. Yes. I believe online can hear me. Any issue with online? Okay, noted. We can't hear you. Can you hear me? Online.
Yes,
It's fine now. It's fine now.
We can hear you now.
All right. So that is how they can form revenue. You can generate revenue from this aspect. Then another thing you can also have is new customer acquisition. Projected increase in website traffic. You also see if we are going to go into this particular area, we are likely to get 50% increase in our customer, which will directly affect what? Our revenue. Are we getting that now? Average order value. It can also be if what they have been ordering before is $50, and they said the average order will increase by what? By $100. You also need to multiply that by selling price to get your cost. So all these things are just brainwork. Once you get to examination hall, you will find your way as long as you are familiar with what you are doing here. But we are going to do question 1 for you to know. But I'm very sure their business proposal cannot be more than that first one, especially that diversification and technology, either of the two, or expansion of distribution channel. Those are the 3 key areas they can go into. So if you want to calculate your return on investment on this, we know net profit, which is total revenue over minus cost over total cost. You get your that. Then cost per acquisition, internal revenue per futures, and the likes. All this one you can read it ourselves. This calculation provides insights into the potential costs, revenue opportunity, and return on investment associated with enhancing companies' online presence and e-commerce capability. Are we good to go? Now, number 4 can be customized corporate gifting solution. You know, they have been giving gifts to corporates. They can now say now they want to customize a gift to companies. They will now give you lists of costs and things they are going to use to customize this particular gift. That they will focus on corporates, and corporates will be coming to get this particular gift. So if their MD is doing birthday, they will get it from you. If they are doing an anniversary, they will get it from you. If they are doing wedding, they get it from you. It's going to be a customized one. Okay. They are going to also possibly have research and development as well. Developing customized confectionery products and packaging. Testing and refinery recipes. All these material and ingredients they are going to use. All these ones are research, and that will not be part of the relevant information. Product equipment. For them to go for that customized, they will need to get a new equipment. That special equipment is going to be part of your initial cost, Abi? Yes or no? We remember our initial, our normal investment appraisal now. Then high quality ingredients. The high quality ingredient would be in form of raw materials. So they'll be using it to do what? They'll be using it to do, those will be our variable costs. Those are things we are going to use to produce the products for the corporate. Then design and packaging. Those who are going to do the design for them, those who are going to do the packaging, nylon, and everything they are going to do, they can give you all this breakdown. All these are direct costs. They are raw material, direct raw materials. And they are relevant. Okay? All we just want to do is to get total cost, total revenue, less it. If they give you cost of capital, discount it and get your net present value. Do you understand? Then marketing and sales, marketing material and samples for corporate clients, sales team commission. All these are labor and they are direct. Logistic and fulfillment, packaging and shipping costs for corporate orders and the like. So by the time you calculate, then storage and warehouse, put them. So by the time you calculate that, you are going to get your total revenue minus total cost. Then whatever you get, you are good to go with that. So you can look at the revenue, expected revenue from corporate orders. How much are they going to be ordering? Then average profit margin on corporate. Then repeat business and referrals. If I want to give them 20% of clients, so in nutshell, just get your revenue and calculate that. Then you can calculate your return on investment, your gross profit margin. We know how to calculate gross profit margin, cost per acquisition, then customer lifetime value. Okay. Then the last one is sustainability initiatives and ethical sourcing. Sustainability initiative and ethical sourcing. Proposal: strengthen sustainability practices and across the supply chain, including ethical sourcing of raw materials and environmentally friendly packaging. You know, they have been conscious of their environment and they have already contacted farmers. Farmers have been supplying raw materials to them. Do you understand now? They may not want to decide that they want to go into sustainability product, raw material they are going to be using. You know, they are very conscious of the environment. They said they use green gas energy. So which means they don't want to pollute the environment. So they may want to go into contract with those people that will supply them. So they will give you information concerning that. So what are the likely information you will get under that sustainability for sourcing the raw material? Number one, conducting audits and assessments of suppliers. What are the costs it's going to take you to conduct the test? Obtaining certification for ethical sourcing. If you want to get raw material from these people, they must obey ethical standards. For example, I want to be selling this cake now. I need flour. From a company I want to be buying flour from, or from the farmer I want to be buying flour from, they are using children to do the farming, maybe like 15 years downward. Because it's not ethical. That's child labor. Do you understand now? So you won't be advising them to go for something like that. But if they give you cost in that form, you will calculate all the necessary costs. You will calculate everything. Even if that aspect is more profitable than the other proposal they are going to give you, you will still reject this based on the unethical things you have been able to identify. But don't forget, by the time I start reading report for you, you will understand. Don't forget, you have to sit on the fence. You not say, don't go for this. You will say, if you are going for this particular proposal, these are the likely things you are going to see. You will bring the positive aspects. You will bring the negative aspects. You will not leave it for management to decide which one they are going for. Do you understand now? Okay. Raw material and packaging, premium for ethical source raw materials, transitioning to environmental friendly packaging, supply chain optimization. What again do we have? Training staff on sustainability practices. All these are costs you are going to incur. Creating sustainability focused marketing campaigns, sustainability reports and communications. Because you need to continue to write the sustainability reports and the communicating to the board. All this will be put together. What are the likely revenue you are going to get from there? Brand loyalty and premium pricing. Potential increase in brand loyalty. You know, when your sustainability, when you obey sustainability, when you keep your environment safe for people who are living there, what will happen? They will like your products. They will recommend your products. They will give you more preferences for your products. Do you understand now? That is area I want us to look at. Then the next one is average annual revenue. Because of that sustainability and giving back to the environment. Yes. I don't think so. We can check. Ask that man. Do you understand now? Average annual revenue. Maybe as a result of keeping this sustainability, it will impact your what? It will impact your revenue. It will increase how much you are going to be generating. Do you understand now? Then additional revenue from brand loyalty. They can say it's 15%. So if average revenue is 1 million naira, it means 50% of it will be how much? It will be $150,000. So it means your total revenue under this will be how much? Will be $1,000 or $1 million plus $150,000 as a total revenue for that year. Then market expansion and new customer acquisition. Attraction of environmentally conscious customers. Average spending per new customer. Additional revenue from acquisition. You know how to calculate that. Then you can calculate your return on investment. You calculate your cost per acquisition, whatever they want you to calculate. Incremental revenue per initiative. Then environmental impact assessment. What is environmental impact assessment talking about? Evaluate the environmental benefits achieved through sustainability initiatives, such as reduction in carbon emission and waste production. As long as it's going to reduce the pollution, anything that can give pollution, as long as it's going to reduce it, then you are going to take note of all those items. What are the likely things they can ask you to do in the business proposal? That is requirement 2. That will be trend analysis, ratios, return on investments, and net present value. Okay. Now, that is the end of the requirement, likely requirement 2. Okay. Don't forget that exhibit 6. This is how they are going to form it. Exhibit 6 or exhibit 5. They can put it as exhibit 6 or 5. This is how it's going to look like. So just make sure you find your time to look for that aspect. Now, let's go to the other area. Just keep all your questions to the end of the class. Don't worry. Now, requirement 1 is going to be a detailed review of strategic business. We don't know, but it's going to be based on their requirements on the receipt. They said performance, financial performance and weakness. That is how they put it. Financial performance and weakness. So it means when you are calculating requirement 1, it's going to be financial performance and what? And weakness. And what is it all about? Now, let's go to that ratio analysis. So we want to look at requirement 1 in details now. Let's go to that requirement 1 in details. What are the likely things they will ask you to do in that requirement 1? In that requirement 1 online, I believe you are together. From that case, we have statements, profit or loss. Sorry, let me just try to ask this question from someone. So if you look at financial statements, profit or loss for 2 years, they also gave us profit or loss. I mean, they also gave us balance sheet items. That is statement of financial position. This is how they are going to give you. Definitely, they are going to give you the one of 2023 for information. Now, either they ask you to do it or not. Here they hear me so. Do your trend analysis. It will not take you much time. You may not have that time to do everything. But all you have to do is revenue, cost of sales, gross profit, profit before incomes and tax, and profit become income tax, and then profits after tax. If you don't have enough time, do that specific line items for your trend analysis. Are we good to go now? Now, these ratios or this trend analysis I calculated is based on the group as a whole. It's based on the company as a whole, spicy as a whole. Are you getting that now? In your unseen, they may ask you to do it on business units, not on the company as a whole. You will not go to the business unit given to you. You will look at their revenue. You will look at their gross profit. You look at their cost of sales. You will look at their profit before income. I mean, profit before tax, income tax. You will look at the profit after tax. You will do the trend for that. If they give you in units, business units, okay? Maybe they have departmental units, manufacturing units, sales units. Do you understand? You will do it in units like that. If they give you in geographical aspects, you will do the trend analysis very short in that geographical. Do for Lagos, do for Abuja, do for the company as a whole, spicy as a whole. So it means you will have Lagos, Abuja, and spicy. Are we getting that gist now? If they give you per division, you will do trend analysis for division A or manufacturing division. You do for sales division. You will do for spicy as a whole. Do you understand now? You do revenue, you do cost of sales, you do gross profit, you do. If you cannot see revenue in their analysis, you cannot see the cost as a. They will give you something that will represent revenue, inflow. They will give you something that will represent outflow. They will give you something that will represent what? The profits they are going to get. They are going to give you information about tax. Do you understand? You will calculate it based on that trend analysis. So what you have done now is the analysis of the performance. Now, if you now want to calculate the performance, financial performance of the organization, anytime you hear about financial performance of the organization, the thing they are talking about is profitability ratios. Performance is talking about profitability ratios. And what are the profitability ratios they are talking about? The time will not be enough for you to calculate, but you can pick some of them. You can pick gross profit margin, net profit margin, and make sure at least try to put ROCE, return on capital employed, return on assets. Do you understand now? Parts, profit after tax margin, profit before tax margin, return on equity, return on total assets. And make sure you know the formulas. You can see the formula here. And when you are doing it, you must do it the same way I've done my own here. Your ratios must be on tabular format. You can see the way I put it in tabular format. So you must go with your ruler, rule it properly, and put them in tabular format. Sure, you go with your ruler. Then, if this information is based on units, you will do for sales units, you will do for manufacturing units, you will do for spicy as a whole. If it is per division, you will do for division, production division, you do for sales division, you will do for spicy. If it is geographical, you will do for Lagos, you will do for Abuja, you will do for others, you will do for spicy. Depending on the information they are going to give you. Are we getting that now? But where are you going to know? How are you going to know which one I'm going to calculate? From the requirement one, they will tell you, analyze whatever financial performance of business unit, of geographical unit. If they put business unit and geographical unit, it means you must do the one of business unit and what? And geographical. If they want you to do for the business as a whole, as a spicy as a whole, it means you are going to pick the spicy as a whole. If they want to do for division, they will put division there. You will see the green lights in that requirement. Okay? So to do the calculations, to do the ratio is not the problem, but interpretation is the problem. You must know how to interpret it. Now let's look at the interpretation. The better, the higher, the better of gross profit margin. No be so? So if 2021 is higher than 2022, it means 2021 is better. If 2022 is higher than 2021, profitability ratio, the higher, the better. So you can see now, in 2022, we have 47.67. But in 2021, we have 44.87. Which one is better? 2021 or 2022? 2022.
2022.
Can we see that now? And let's go to the comment I put there. This has shown a consistent increase over the years, indicating efficiency in production and cost management. You cannot have the efficiency if you didn't control your revenue and cost properly. For you to have increase in gross profit margin, it means you have controlled your costs and you have also managed your revenue properly. So it means the only two things that can affect your gross profit margin to increase is what? Is your costs and revenue. Are we getting that now? You will talk about that two things. They will give you 2023, you will do 2023 beside it as well. How do we calculate it? I believe this one is not a new thing again. How do we calculate the profit, gross profit over, gross profit over total revenue multiplied by 100%. That is what it's going to give you. For those who put all this material on Excel, you are going to click on it. You will see the formula on it. The formula is there already. How we got it. Okay. How do we get this trend analysis? If you come back here, you will see the trend analysis is current year minus previous year divided by previous year. That is 2022 minus 2021. Whatever you get as a difference, divided by what? By 2021. It will give you this figure. And that is what we have done. The same thing to the second one. 2022 minus 2021 divided by 2021 will give you this figure. And that is what we have done to get all these figures. Are we getting that gist now? So this is how we are going to calculate all our ratios. We have done the profitability ratio. The profitability ratio is the one talking about the financial performance they are asking you of. Are we getting that gist now? Make sure you join online if you are going anywhere. So that you not miss. Do you join? Are you okay? Fine. Do you understand now? So profitability ratio is talking about the performance, what? Financial performance. And you can be talking about the gross profit margin, PBT margin, PAT margin, ROCE, return on asset, and the like. Those are the performance. That is how you are going to know if your organization is performing. Majorly, when you are talking about performance, we use income statement to do the performance of organization. Do you understand now? But when you are talking about strengths or weakness, we use the financial position. Do you understand now? So when you're talking about the financial position aspect now, that is when we will now be talking about what? You know, we've talked about the performance. So the profitability ratio and performance, we're talking about ratio, return on equity, and the like. And I believe that one is clear. So when we are talking about, I have someone is playing with my screen. When we are very serious here. You are drawing on my screen, oh. Then when we are talking about the weakness and strength now, we are talking about the liquidity aspects. We are talking about the current ratio, quick ratio, cash ratio. We are talking about working capital. Do you understand now? We are talking about investor ratios. That's where you're going to know if company have strength or is weak. If there's strength or weakness. Performance is focusing on income statements. Why weakness or strength is focusing on financial position. Do you understand now? In some case study, they will say identify weakness and strength. But in this one, they only put weakness. Either they put only weakness or strength. They're talking about financial performance. Do you understand? I mean, financial position, sorry. So I believe you all know how to do this. The only thing I just need to calculate, okay, so when you are talking about liquidity, it must be the higher, the better. It must be ratio 1. But when your ratio is more than 1, it means you are doing better. So in 2021 now, for example, under this current ratio, we have 0.93. In 2022, we have 1.03. Which one is better? They are doing better in 2022, Abby, because they have higher ratio. Do you understand? And if you look at it, let's see, has remained relatively increased, suggesting a consistent ability to meet short-term obligations. Do you understand? When your current asset can cover your current liability. For example, I'm owing someone 20,000 naira and I have current asset as 50,000 naira. If the person do anyhow, I can pay the person off. So it means I have strength in that area. But if I'm owing you 20,000 as a current asset, when you look at your current liability and I'm having 10,000 as your current asset, it means if the person wants to do anyhow, I have to beg him because I'm weak in that area. Do you understand now? That is the area of that. Working capital days. The higher for the inventory, the better for days. The higher for the receivable days, the better. For inventory, the lower the inventory days, the better. Because you are able to convert your inventory to cash within the short period of time. You can put it somewhere. The lower the inventory days, the better. The lower the receivable days, the better. But when you get to payables, the higher the payable days, the better. Because you are able to hold their money to run your organization or to run the working capital. Are we good to go now? So if you read all the comments by the side, you will see that this comment is what I have used in my report. These comments now, those are the things I put together to form my report. So those are the things you are going to use, put the words together to form your report. In case study, you won't stop writing. You'll be jackpot, jackpot. Bring this one, jackpot. Bring this one, jackpot, 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 jackpot. But what you are jackpotting must make sense. You are combining this information from here to this one. Bring this one. Just continue to write everything together. But make sure you are writing good sentences, good grammar, and be mindful of the accounting terms you are using. Make sure you are not blowing bomb. Okay. So we've talked about the working capital. The next one is efficiency and turnover ratios. If you look at the way we have calculated cost over payable, revenue over receivables, all this one, just look at it. You will see, and also read the comments by the side. Read the comment by the side, and you are good to go. Then when you look at the solvency ratio, we also talk about weakness or strengths of organization, especially organizations that have debts. You want to know if they can meet up, if they can continue with that debts, or they are struggling, if their going concern is in trouble. Do you understand? So in this case now, you can see we said debt to equity is talking about loan over what? Over equity. And the loan we are talking about here is only the long-term loan. The long-term loan. Okay? The long-term loan. However, we can as well add the short-term loan to long-term loan, because both are our total loan we are talking about. Do you understand? So probably maybe I'm going to adjust that, but let's continue for now. Then debt to equity, loans over equity plus divided by equity plus loans. The loan we are talking about can also be short-term and the long-term loan. But make sure you are not adding the VAT tax to it. Make sure you are not adding employment benefits to it. Make sure you are not adding what again? Trade payables to it, accruals. All those ones are not normal loans. Okay. Then interest cover. That one is talking about operating profit. That is profit before tax. Over what? Over finance costs. Over finance costs. Then debt to debt to total assets. Total loans over total what? Total assets. Time will not be enough for you to calculate all these ratios. Just pick like 2, 2. When you want to work under profitability ratios, pick like 3. When you want to talk about efficiency, pick like 2 or 3. You can talk about the whole 3. When you get to insufficiency, you can talk about 2. When you talk about all these ratios, just pick the one you know you can solve, depending how fast you are. Okay, please don't forget about the time allotment and a portion I want to talk about. So, people of God, this is how the requirement 1 will look like. We've talked about requirement 2. We've talked about requirement 1. And don't forget that requirement 1 can be in form of what? Can be in form of spicy as a whole, can be in form of business unit as a whole, can be in form of what? In form of division, can be in form of geographical, like Lagos, Abuja, can be in form of products, can be in form of manufacturing or whatever. Just make sure you watch out for that, their requirements. Now, having done that, let's stop this now. And if you look at my calculations, I put it in a tabular format. Now, when you are in exam hall, when you are in the exam hall, you may not show all these comments by the side. Are you getting that gist now? Because by the time you are writing this comment, it will be taking your time. Since you are still going to write all these comments in your report, the only thing is that you are just looking at that calculations and you are interpreting it. It's not about cramming. You don't need to cram when you are going for this case study. You need to really understand what they are written. Sit down, understand it, so that if something else happens in the unseen, you will be able to maneuver your time yourself. So you don't need to cram all these comments I have put here. But sit down yourself, look at the comments and see, why did I put this comment here? Okay, it's because the profit increased in 2020 to 2021. Anytime I see something like this is how I'm going to interpret it. You understand now? Put your mic, please. Put your mic. Don't know why you are unmuting yourself. Okay, so I believe we are all good together. So let's continue from where we stop. Okay, so all these comments, you don't need to put it in your calculations, but you will know how to interpret it when you are writing your report so that you don't waste your time. Don't forget, you only have 45 minutes to do these calculations. So you don't need to sleep in that area. Another thing you must do, stop unmuting yourself now. Why are you disturbing? Then if you look at this calculation now, you will see that we have what? I put appendix 1 on the trend analysis. That is our appendix 1. That is how you must do it. Appendix 1 on the trend, appendix 2 on the what? On the ratios. Appendix 3 will be your business proposal 1. Appendix 4 will be your business proposal 2. Are we getting that now? I should take it again. Appendix 1 is your trend analysis. Appendix 2 is your ratios you are going to calculate. Appendix 3 is your business proposal 1. All this calculation you are going to do, that's appendix 3. Appendix 4 will be your, and because they are going to give you 2 options of that business proposal. So this next one will not be appendix 4. Do you understand? If they give you anything about tax stuff, that will be appendix 5. So when you are writing your report, you'll be referring it to all these appendices where you got all this information. Do you understand it now? So let's go to the other material I have for you. So I've treated 2 materials now, and they are very vital. So let's go to another materials I have for you. So I've talked about possible business proposal. I've talked about possible financial ratios, which is requirement 1 and requirement 2 have been settled. Now, these people can come out in another way. They can come out in what you have learned in CSME. Mr. Taufik, where is he now? He can come out in another way in what you have learned in CSME. And what are those things? Those are the strategic business strategic management. We remember our business, our CSME. All this business strategic we have. Porter, diamond, value chain, pestle, SWOT analysis, 5 forces. They can come out in another way. You can see that I'm giving you in 3 areas now. The first one is requirement 1. The second one is requirement 2. Another one they can come out from is what we call business analysis. Business analysis can be as a requirement 2. Now, there will not be anything like calculations. They will now replace it with business analysis. Or business analysis can be requirement 1. There will not be anything like performance, but there will be. Even if they don't ask you to do the ratio or whatever, since they put performance, financial performance, do small ratios based on the information given to you, and then do business analysis. Anytime you see business analysis, is talking about strategic management. Are we getting that now? Let's go to Pathfinder 2018. Pathfinder 2018. Let's see the way they put that requirement for you to understand what I'm talking about. Yes. Okay, so let's look at it. I believe online can see what I'm sharing. So,
Yeah.
okay, fine. So let's go to that requirement. You can see that this is where they gave them, you can see the way they gave them this exhibit 6 here. Highlights of loan approval in principle. This is business proposal now. Are we together? So this business proposal, you can see they gave them different arrangement fee, management fee. So all you need to do is to apply all this percentage on the information given to you for you to get figure for each of them. But that's not where we are going. You can see assuming an exchange rate is how much? 350 per $1. So let's still continue. I'm looking for unseen parts. Okay, it's like we have passed unseen. So let's go a bit up. So this is the real case study. I'm going for the unseen part. This is the full case study. This is how you can see in your pre-scene, they gave you this exhibit, 1 to 8 exhibits. Okay. But in their unseen, this is exhibit 1. In their unseen, they gave them how many exhibits? They gave them 3 to 8. Let me see. So all this business proposal, this is how they are going to put it. It's going to be in exhibits like this. You can see this exhibit 2 now is another business proposal. DDT Communication Nigeria Limited. So business, if they want to do diversification, this is how they're going to put it. Instead of saying restructuring for our loan portfolio and business analysis, they will put diversification of something. So you now read the information under that to calculate your business proposal. Okay. I'm still looking for that, their requirements. I'm actually looking for unseen part. You can see that they gave you this exhibit 4. They also give them financial data. You can see the financial data here. So financial data, it can be in form of spicy as a whole. It can be in form of products. It can be in form of units. It can be in form of whatever they want to give you. So you just calculate your normal ratios from that area. But that's not where I'm going. I'm actually going for unseen parts. What happened?
Sir, is on the first exhibit.
On the first exhibit?
Yes.
Let me check. There's no other one here. I already snapped that that page to the platform. Okay, so let me go up. Where is it hiding? Let me try to. I snapped that thing on the platform anyway. So in case we are unable to see it, we just speak it from that. We read it from that. I think this is already another question. So let me try to look for it. If you can't get it from here, then I will read it from that. That is why I've been sharing that particular page, because I don't want to forget talking about it. 28.
So I think maybe it is there was nothing like a pre-scene in that diet. Maybe they not started the pre-scene of the thing.
It's not possible. No, how they will not give pre-scene. They not give pre-scene their own diet. They're going to see pepper. They're going to see pepper. Okay, so let's look at this from here. I'm not sure this is what I'm looking for.
I think it's on the next page. The next page.
The next page. Okay, so let's go then. Okay, thank you. This is what I'm looking for. Thank you. So now let's look at these aspects now. This is requirements now, just like what I've been discussing. You are required to work on the assignment using Exhibit 2 to 8. This is on scene part now. And draft a report for my what? For my consideration. Is there any difference between my review and my consideration? Now, grammar, is it the same thing they are saying?
No,
Your report should include 1, the analysis of DC current financial position. What is he talking about? He's talking about balance sheet items, indicating the best way for and obtain further loan to finance its network expansion. You should also carry out an analysis of the viability or otherwise of the proposed network expansion.
Hello.
Hello, are you there? Hello?
Hello, are you there? Can we hear you?
I can't hear anything. Is he online?
Huh? Is he there?
I am there. Oh, this is serious. Can we use your your hotspots? Can you hear me online? Can you hear me now?
Yes, I can hear
We
you.
can hear you now, loud and clear.
Okay, the network is. Go ahead. Okay, the network is fluctuating a bit, so let's just try to continue with that. Okay, so what I'm trying to say.
Heavy rain.
Okay, so what I'm trying to say is that the first one is analysis.
I believe the record will not be like will not be breaking as it is here.
Don't worry. Let's just mute our mic. Let's continue. So the analysis of this, so you can see that that first one is talking about financial analysis. Anytime you see analysis, so just do your ratios and normal analysis you want to do. Do you understand? But because they are talking about loan restructuring here, you will talk more on solvency ratios, because that one is talking about loan and the like. Now, instead of putting the business proposal as second requirement now to calculate, they not put business proposal. They are now putting business what? Analysis. So it means they want you to use what? They want you to use strategic management approach to give them the advice whether to go for that particular project or not. So let's read it together. Requirement 2, business analysis of DCN showing the company's strengths and what? And weakness. When you see business analysis and they're saying show strengths and weakness is talking about SWOT analysis. You can also use what? You can use pest therapy and so on. So, and potential opportunity to company can tap and potential threat into business environment. You must know strategies that is talking about business environment. You are also to suggest strategies. They even said it, they are giving you direct information here. The company should follow to build on its core competencies. Seize the opportunity and avoid potential threats in the business environment. Without telling you, you should know that this one is not talking about calculation in business proposal. It's talking about using brain, full brain of strategic management, CSMA. That is why they want to merge CSMA to SFM, because that paper is supposed to be in professional. That paper, if you read them and don't study, you don't understand it. You need to understand it before you can use that strategy management. So this is aspect I want to show you so that you will know the areas they can come from. I want to show you every area that is likely for them to come out from. So that when you see them, you will not be afraid, you will not be disturbed. You just carry on with your work and carry on. Now, so far so good. I've talked about the possible business proposal. I've talked about business analysis that they are likely to come about. I've talked about the calculations of ratios, that is the performance of the organization. I've also talked about the introduction to case. We've talked about this one in our first video, so we don't need to waste our time on this. So the next thing we now need to do is to go to our main reports. That is what we now need to understand. We now need to understand what they want us to do. Maybe I should use, okay, online, can you hear me? Can you say something?
Yes, loud and clear.
Yes,
okay,
go ahead.
Okay, so now, from all the calculations and what you have been doing since morning, you must not spend more than 1 hour. Do you understand? For ratio performance, for business proposal, for business analysis, don't spend more than 1 hour on that calculations. Because it doesn't fetch you more mark. Where the real game is the report. So let's now go to the real game. Now, people of God, this thing I've written from here to here, you don't need it in your exam. I hope you are checking it from online. You don't need to write HOA, House of Accountant, physical online lectures. You don't need to write James Olashore. You don't need to write case study, precision analysis, diet. That one is not necessary. I only put it as my own cover page. I don't need to put our logo. Now, the first thing you need to start with is this first page. Your first page, that is what we call cover page. You can put from the requirement 1 and 2. You will now frame it to form this heading. Reports on the evaluation of the company performance. You know, they ask us to do performance. If they ask us to do liquidity, profitability, efficiency, what we are going to put here is report on the evaluation of the company's liquidity, performance, and profitability. But because they ask us to do performance, you will put company's performance, financial weakness, because that is what they ask us to evaluate, and appraiser of strategic business proposal. We don't know what is going to be. That is why I colored it. Assuming it's going to be product the diversification, you will put it there. Okay, it can be report on the evaluation of the company's performance, financial weakness, and diversification of products. Or you can put a business proposal on business diversification. Do you understand? But if you don't want to go to that, all those areas, you can leave it this way. Appraiser of strategic business project plan or business proposal. Do you understand? Now, that is the cover page. You will now put disclaimer. Disclaimer is what you see here. The content of this document is meant for the sole use of the directors of Spicy Confectionery Limited. No third party is expected to rely on these documents as the company and its staff are not responsible for any third party that may rely on it on your own. That is disclaimer. These two will be on your front page, on your page 1. On page 1. That is the first thing you are going to write. It doesn't take more than half mark or 1/4, but at least it's something. That is first thing you are going to leave. Just leave this one like that as a front page. Just do it the way it is here, the way this report is. Just follow me, bomber to bomber. So this is what we call cover page. Do you understand? The next page is what we call, this is next page. This is now where you have the dates. Now, this date you are seeing, it's not, that's why I colored it. In your report, the letter, the email that Media, your supervisor is going to send to you, you will look at the dates he sent that report to you. If he sent that report, that email to you, 1st of November 2021, you will count 2 weeks, you will count 1 week and put it on the date here. This date you are going to put here is not the date on the examination date, on the examination day. Do you understand now? It's not going to be the day you are writing case study. Okay, based on the illustration I give you, Abi. No, let's look at this way. Let's assume that in the email, the first proposal, business proposal I showed to you, let's assume that that supervisor sent a mail to you, and on that mail dated 3rd November 2022. If you come here now, you will not put 3rd of November because that is the day to receive the message. You cannot get the email on that day and do all the analysis on that day. It doesn't make sense. You may not be able to do it on the 2nd day, but probably on the 3rd day to 5th, 6th day. It will not be more than 6 days because they will put it in the next 2 weeks. So you must meet that deadline. Do you understand now? So you can use between 4th to 6th or 7th. So that's, and now, exactly, depending on the date on that email. But you have to make sure you leave space between the date you receive the email and the date your supervisor will review it first before sending it to that board of directors. You will give him that space to review before he sends it. So let's say 1 week. They will give you 2 weeks in the requirement that in the next 2 weeks, we want to submit it to board of directors. So you work within 1 week. Do you understand now? Online, I believe you got that point. Now, don't forget your supervisor there, you should write the report for his review. But on this place now, we are not addressing this report to your supervisor. We are addressing it to who? To the board of directors. Because your supervisor will only look at the report, review it, make necessary correction, and send it to board of directors. Are we getting that now? Then, who are you talking about? You are talking about Spicy Confectionery Limited. So that is majorly why we said is a what? Is an external report. Because you are not working in this Spicy Confectionery Limited. You are working in Chuku, whatever, co and co. Is an audit firm. Are you getting that gist now? Is it clear? Now, apart from what you have written up, good. Apart from what you have written up there, you will now do subject matter. Subject matter. The subject matter is talking about what? Company financial performance analysis. You know, that is what they ask us to do. And strategic business proposal, project plan. the two requirements, requirement 1 and requirement 2. Assuming they ask you to do business analysis, you are going to use business analysis here. Are you getting that now? The report, there's no format, there's no real format. That is why ICANN is not giving format on report. Nobody can say I have best formats. What you need is the points you can deliver. If you have strong points, do you understand now? You don't need to be running up and down this report. Very soon now you will see different kind of draft report going up and down. You will see so many draft reports. So don't be scared that my report, am I right with this draft report? Stick to one draft report format. Then make sure you are able to deliver solid points. Is the points ICANN is looking at. But the only thing is that if it is external, you must use external format. If it is internal, you must use internal format. Apart from that, the thing remains the same thing. But the first thing is that executive summary must come first. Then body of report, then calculation must be at the last. So we are still going to look at it together. We still have enough time. We still have like 1.5 hours. Just follow the report. Everything is in this report. Whatever you want to write on that day, this is how it should look like. This is how you are starting from start to finish. The only thing you want to add is the information we are going to get from unseen to this one. Follow everything here. You don't need to write, you know, your audit firm. You don't need to write that one. That some people can say you should put it, that you should put your letterhead and don't put letterhead. If you put it or not put it, the mark is less than half. Or let's say maximum half. As long as it's external report, you can put letterhead.
Hello, the executive summary. How many months does it carry? That people really have different formats for it. Just like that.
The maximum you can have there is one mark. But let's keep all our questions to the end of the class. You can see that the class is moving now, so that we will not be distracted with any question. Let me give every information you need first, so that nothing will escape my mind as I have planned to deliver the lecture. Yes. Just try to mute your mic, please. Let me try to mute the person. You can write it somewhere. Write your question somewhere so that you not forget. So you can see the headings. After the heading, then we have executive summary. Immediately after that, you can see the way it is arranged. So this is how you should arrange your report too. Executive summary. Executive summary it carries 20 marks. Don't allow your executive summary to be too long. Executive summary means the CEO, the directors don't have enough time to read your whole report. But once they take the executive summary, they should understand what the report is all talking about. Are you getting that now? So from here now, executive summary should not be more than 2 pages maximum. You are good to go. So, but whatever you want to put in that executive summary should be solid points. That you know that this one, if examiners see this one, they must give me my mark. That will prepare them to go further to read. They will carry that interest to read your full reports. Are you getting that now? Now, what are you going to see under your executive summary? You will talk about scope and objective. This report provides information on the results of the evaluation carried out on the performance of Spicy Confectionery Limited. The analysis was based on the key financial indicators attached as what? Exhibit. Copy this one, paste, copy and paste. Whatever you see on this report, this aspect, copy it and paste there. I will tell you what to copy and paste. I will tell you where you will not copy and paste. Then the second one also, this report also consider proposed strategies by the management together with the analysis of both opportunity and threat. And this one, you may not copy and paste. This one is talking about what? It's talking about requirement what? Requirement 2. Do you understand now? So we don't know the requirement 2 yet. That is why you cannot copy this one, copy and paste. But the first one is talking about performance. So we all know that one already. But the second one, we are not sure about it. So you cannot copy that one and paste. The objective of this analysis is to provide information that will assist the board to make informed decisions on the financial performance and the strategic business proposal. Only the strategic business proposal that you may try to look at it, the requirement. Every other thing, copy and paste. Methods of evaluation include trends, relevant ratios, and strategic analysis. If they give you business analysis, you use business analysis. Copy and paste. Yes. Now, company profile, copy and paste. Because they have given you company profile in pre-scene. Nothing will change from that. What is it all about? Because you are writing an external report, it's going to be in this format. Spicy Confectionery Limited has been in operation for many years with a very high quality confectionery product, both locally and internationally. SL has a high market share through a multi-channel network distribution of products such as supermarkets, outlets, contract bases, and franchises. SCL business model emphasizes what? Sustainability and corporate social responsibility with initiatives like sustainability sourcing of cocoa, eco-friendly packaging, and green energy use. Copy and paste. Do you understand now? You can see this thing I did not copy directly from that SB2. I reframe it. You don't need to read it. This thing, you understand what it's all about. Not, please, not the pre-scene, Don't go and copy and paste from pre-scene, If you copy and paste from pre-scene, from the Class-Ican question, that is, you must not copy the same thing like that. It's error. When I say copy and paste, it means from my solution. Do you understand? From my own draft report. Don't ever, it's a pitfall that you must run away from. Copy and paste, direct word. Even if they say white, if you want to say it in your report, don't say white. Do you understand? Bright. Use another word, bright. Don't use white. Operational analysis. You can copy that one and paste. It's given already in the pre-scene. So SLS diversified product portfolio, including chocolate and non-chocolate confectionery, has helped in expanding its customer base and market reach. The emphasis on online sales, particularly during COVID-19 pandemic, has enabled the company to adapt the changing customer preferences and mitigate the impact of lockdowns. Also, the focus on sustainability and corporate and social reliability reflects positively on the company's brand image and resonates with modern customers' value. You know, when you are doing good things to the environment where you operate, it will impact your revenue. For example, HOA is here now. We just paint this street. Maybe we just help them to do the street from here to there. They will ask, who did this street? It's HOA. Is these people? What are they into? From there, you will start getting more customers. Then you can also talk about the market position. Market position is also copy and paste from the solution I have here. Their market position and growth strategies appear robust, as evidenced by their expansion into various product lines beyond chocolate confectionery. The confectionery market analysis indicates a positive outlook for industry, with projected growth driven by factors such as rising disposable income and involving customer preferences. However, it is crucial to monitor any potential impact from factors like raw material prices, volatility, and changing consumer behaviors post-COVID-19. Okay. Now, after that, don't forget I said your executive summary should not be more than two pages. You may not be able to grab all this information I've been reading fully, but at least if you can read like if you can write at least 3 lines, then if you go back to the pre-scene, if you look at that information, you will read it yourself. Pre-scene is like the answer are there. You look at it. I want to talk about market position. You have idea from that thing, but you forgot it. You now go back to that case study. You look at it. I think this is where we saw that solution. You will read it and you now reframe it to add to what you have written off head. You may not even write everything off head. You may go back to that pre-scene and reframe it. And this is, I think, it looks like what HOA has written. It's not compulsory. It's not necessary that it must be word for word I've written here. Go back to that pre-scene. You too reframe it in the exam. Do you understand now? This is, I think it looks, by the time you read it again, I think it sounds similar to what we have done in class. Headings must, yes, put the headings like that. Headings, company profile, executive summary, scope, and put all the headings. Talk about them bit by bit. No, they not ask you to talk about it in the requirement, but they expect you to talk about it. Yes. Do you understand? But this is executive summary anyway. And if you like, you may remove market. If you think that you are having more than 2 pages, you can remove market, you can remove operation, talk about only executive, talk about only financial analysis. I think we can remove the market and the operational. You can put those two to body of reports. Scope is very vital. Company profile is vital. Then financial analysis, we want to talk about now. So the financial analysis is talking about, I intentionally give you full details here. You can now decide what are the things I want to talk about. When you get home now, or after this class now, sit down, get 4A paper, like 2 or 3. Practice the report from the beginning to the end again. The way you are going to do it. The first time I failed case study, I didn't practice at all. It was on the exam day. When I finished all my paper, I wrote 5 that diet. When I finished the remaining 4, because case study is always the last, in the midnight, like 10 or 11. Me, I don't like reading at night. And I started writing that report. I'm going to do it. I'm going to do it. It's very late. But the second one, when I wrote, I passed. Like a week before, I've started writing the report. I've practiced like 2-3 times. So when I was writing it in the exam, like my pen was dancing all through till we finish. And I scored 70. So my pen was dancing all through. Despite that I did not finish the report, but I know, say, I touched the calculation, business proposal, the financial analysis. I finished the executive summary. Then I almost finished my main report. So when I know that I could not finish the main report, I quickly go to the last end. I rounded it up. I put training and whatever. At least I will get half mark. So I will not lose mark because I did not finish it. Do you understand now? Now, strategy, you have to strategize. Finish it, round it up. So let's move on now. Financial analysis. And make sure you look at the time. Make sure you are watching the time, please, when you are writing your report, because it will consume time. The time is there. As I was writing, even the invigilator was looking at it, waiting they do this one. I was looking at the time, writing at the time. When it is time, I will drop it. I have timing for everything. My calculation must not be more than this. My executive summary, this is the time I'm going to spend. When the time is up, I will stop. I will go to another one. Fast. It must work. Oh. Okay, so let's go to financial analysis. I want you to see the way I'm going to analyze the financial here. And how I'm going to analyze the financial under main body of reports. Under this financial performance, I said financial performance is talking about your income statement majorly. So financial performance, and I'm putting this financial performance because in that requirement they put financial performance. Assuming in that requirement they put profitability, sufficiency, liquidity, efficiency. I will do it one by one. Efficiency, profitability, liquidity, sufficiency. I will put them one by one and talk about it. But they just said financial performance in the exhibits, in the requirements. So that is why I'm only talking about financial performance. And what are the financial performance we are talking about here? SCL has shown consistent revenue growth over the past 2 years. Yes or no? That is true. What happened? A notable increase from 1.6 in 2021 to 1.7 in 2022. You don't talk with that. Bullet point. If you now want to do more than necessary, it can come. This could be as a result of increase in customer or increase in sales value or sales in quantity. Simple. That is what they want to hear. You understand? Then point 2, gross profit margin have also improved. It means you must go, by the time you say something like this, there's the marker. We go back to that gross profit margin. You're working. And we look at it. Is it true? Okay, the gross profit increased from 2021 to 22. Okay, it's right. It will now come back again. What happened? Indicating better cost management and operational efficiency. For the gross margin to have increased, it means you have been able to control your cost of sales and then operational efficiency. That is the 2 points. So if I want to write it well now, I made mistake. There's something I omitted here. At the front of this performance analysis, you can put appendix 1 or appendix 2. The appendix that is talking about it. Do you understand now? Do you understand? But here, that will be when we get to the under body of reports. Do you understand? So next one, however, finance expenses have decreased. We will go back there. Is it true that the finance expenses decrease? What could happen that your finance expenses means interest on loan. So what could happen that your interest on loan will reduce? You know, so indicative potential saving in interest cost. It means you are not paying high interest again. Probably maybe your loan has reduced. Maybe they have restructured your loan. Maybe you have paid up some loan for your interest to reduce. Is a plus for you, yes or no? Is a plus for your interest on loan to reduce. Next one, the significant increase in income tax expenses in 2020, in 2022 compared to 2021 demand attention. What could happen that your tax will increase more than the last year? Probably because your profit has increased. That is one. Or probably there is tax law that has affected you. So they need to go and look at it. Attention, that is why we say demand attention. Your tax cannot be going up every time. You have to control it. You have to know better tax planning. And the reason why I put it there is because in the requirement, they are talking about tax planning. It means they are paying higher taxes and they want you to advise them on how to reduce those tax, how to manage their tax. Do you understand? So that's why I have to mention that aspect. Okay. Sure. You take them one by the other. You take revenue one after the other. Exactly. You take them one after the other. That is even that's even the in-depth analysis. For you to do this, it means you understand. You have done your workings. Do you understand? But assuming they mention profitability and all the like, you will talk about profitability. You will underline profitability. What are the things you're going to see under profitability? Gross profit margin, ROCE, a return on asset, net profit margin. You will talk about under profitability. Then you talk about efficiency, inventory, working capital, you talk about it. Then sufficiency and sufficiency, you talk about it. Do you understand? But because we are not going in that way, that is why we are going this way. Because here there's no much calculation. We didn't actually do any calculation here. Is in-depth analysis. You may not make any references here. Do you understand now? This one is a direct analysis from the information given to you. By the time we get to a body of report, you will see the way we are going to do that. Okay, so and analysis to understand the impact of the overall financial aids. The next one, marketing and distribution expenses. You can see we picked that one now. As well as administrative expenses have also increased, which may signify investment in growth and operational efficiency. What will happen for marketing and distribution to increase? It means you are expanding. You are expanding in market. You are going to market to get more share, and going to market, promotion, all these things, distribution costs, sales management, all this promotion, you will actually impart your cost. But it's not a bad idea, but you just have to tell them that this is what is happening. You understand now? The next one is profits before income tax has grown from this 394 to 475, demonstrating overall profitability improvement. For your profit after tax, for profit before tax to increase, it means you are growing. It can also be profit after tax. It can be profit before tax. Both are growing. So it shows improvement. You know, when you are making more profit, it means you are improving as well. That is performance aspects. Then when we now look at the financial performance and liquidity, that is where the weakness and strength. Financial position and liquidity. That is when you will now talk about the weakness and strength of organization. And what are the things you are expected to do here? We have total assets. Total assets have seen a commendable increase from this 1.1 to 1.2. Primarily driven by what? By a surge in current asset. That is, something has happened in current asset which have increased our what? Our non-current asset. And what we can see with our naked eye is what? Notably cash and cash equivalent. Cash and cash equivalent has increased from 2020, from 2021 to 2021, for 2022. The another thing you can see that will help us is what? Is the increase in cash and cash equivalents from 30 to 110 suggests improved liquidity, which is crucial for supporting operational activities and strategic investments. You know, when companies are able to meet up with their what? With their cash liquidity, so they can meet up with their running day-to-day expenses, operation, and the like. So we say that they are doing better than the previous year. Okay, so that is what we have done in that regard. We are still going there. I'm giving you these full details. In your exam, you may not talk more than 4 points, 4 bullet points. Under this equity summary, under financial analysis, under performance, you may just pick solid points, 4. Talk about it and move. Depending on, I'm giving you as many as you need. But make sure revenue and cost is there and profit is there. I will suggest that tax as well. Because of what requirement. Do you understand? But if you have more, you can talk about more. Just make sure it's not more than like two pages of your exam sheet. That is page 1 and the other side, front and back. Thank you. Then, however, it was noting that decrease in long-term loans and the slight decrease in short-term loan, which may indicate a shift in financing strategies or improved debt management. For loan to decrease, their loan decrease in 2021 to 2022, what could have caused that is 2 things. One is either they are managing their debt perfectly, or they are diversifying to another way of financing. Maybe they are getting more equities to reduce the debt financing. Do you understand? And that is what we have explained here. Number next is marketing and distribution. Oh, which one am I talking about now? Is it going down or going up? Okay, so the last one, spicy equity has also increased, reflecting retained earnings and potential reinvestment into business. You know, it's also strength and weakness. Their equity has increased. And under equity, we can have share capital, we can have retained earnings, we can have revaluation, we can have deposits for shares, we can have what again? As many as you can have. Preference shares, share premium. You can have as many under equity. But the one we notice that has changed that increase is what? Is retained earnings. Do you understand? Reflecting retained earning and potential. So since your retained earning is increasing, it means you will have enough to share to the shareholders, and you have enough to also reinvest into other investments. So the other part now is what? Is business, is future business plan. This is requirement 2. You can see under executive summary now, I've talked about requirement 1, financial analysis. I've discussed about in-depth. Requirement 2 will now be based, the next thing after the requirement 1 is requirement 2. It's going to be based on what you have as requirement 2 in the question. If it is business analysis, it means you are going to talk about business analysis here, briefly. If it's business proposal calculation, you are going to talk about business calculation here, briefly. Are we talking about now? So here I say, this is a brain working on scene. Kindly analyze both proposal given. They are going to give you 2 different type of proposal. And advise management on most beneficial. Don't forget to add points from here to your conclusions and what? And recommendations. So what you need to do here is simple. If you have 2 proposals, probably diversification of products and expansion of distribution channel. Let's assume those are the 2 things you have. You will talk about diversification of products here. You will talk about what you have calculated, if it's profitable or not profitable. You will not say they should go for that diversification. No. You will tell them, you will explain. Based on management's proposal to go for diversification of projects, of a product's portfolio. According to information provided, it shows positive MPV, or it shows a return on investment, depending on whatever they want you to do, of so amount, indicating viability of the project. Are you getting that now? However, you will not mention the risk, things that you see that may affect the company. Do you understand? However, going for this project may require additional capital, which the company will not be able to acquire as at now, if that is what they put there, based on the current running debts they have. If they are going to invest in another one, maybe they will still go for bank to go and borrow loan to finance it. You will look for positive aspect of that proposal. You will look for negative aspect of that proposal. Even if it is one point, you must say something about it. Do you understand? You will leave it open like that. You will not say they should go for it or not. Then you will not say why the second proposal on expansion of distribution channel will give positive MPV of 30,000. Full stop. However, this may also lead to you give the negative aspect of it, you give the positive aspect of it. You will leave it open. You will not tell them to go for 1 or 2. You will only give them what they need to know about it. If it is possible, 1-1. If it's possible, 2-2. You leave and we move. That is what they want to see in that business proposal. Now, ethical issue is a compulsory you must identify. So you can put like the same way it is here. Do you understand? The way they have headings here, that's how you're going to put it. Under this ethical issue, you can see I only put how many? I only put 2 headings. I only put 2 points. Labor practices and health and safety standard. Ethical issue. Copy and paste. Copy and ethical issue, yes. Copy and paste. Do you understand? So you may not be able to write all these lines. Read this thing and summarize it. Do you understand? Labor practices. Why SCL emphasizes its commitment to paying top-range salary to its employees and maintaining a culture of openness and freedom. There is potential for ethical concern regarding fair treatment of labor. There is need to ensure that such high salaries are not used to exploit workers or create significant wages discrepancies. Disparities within the organization. If some people are collecting, for example, as an accountant, if you know that this person is collecting 1 million naira, you are collecting 400,000, how will you feel? Will you feel okay? If the person say, come and do this thing, say, Oga, if you know that thing, and you know that this person doesn't know, you will not be willing to show him that, Oga, despite the amount you are collecting, you cannot do this thing. I better leave me alone. Do you understand? So you must, that's an ethical issue there. You identify it. You just have to frame it a bit. 2 lines is okay. Reframe it and make sure you are able to say something about it. Health and safety standard. Introduction of annual independent health and safety audit is a positive step. However, ongoing compliance with health and safety standards, especially in the context of food production, is critically for consumer protection. Any lapse or lapses in maintaining this standard could lead to health risk for customers, for consumer, and damage the company's reputation. You know, it's food something. So if anything happens, for example, if you see cockroach in Fanta or in Coca-Cola or in Pepsi, how will you feel? It will damage their reputation. Do you understand? So the same thing, because they are doing food, they are into food hospitality, they must be careful about this. Okay, so you can just talk about that 2 lines and stay the same. Good. They didn't tell us any information about board here. Do you understand? That's a good question. They didn't tell us anything about board. They're supposed to tell us about the makeup of the board. Finance directors, the chairman, CEO, and whatever. If you get to unseen and not see it, you chip it in under company profile. Chip it in under company profile. When we talk about everything good about, under that company profile, we talk about everything good about company. We say, however, we are unable to know if the company board is balanced or not. Do you understand now? We don't know if the board is well diversified. Maybe we have Igbos only. Maybe we have Yoruba Igbos. Maybe we have Hausa. Maybe we have, maybe it's the same person that is the finance director. It's the same thing that is CEO. We don't know. So we just chip it in a bit. We don't know, maybe they are all the directors are old. There's no new incoming, new experience, and agile. Do you understand? To take over as a going concern of the company. What happens if all the directors die within 2 years to come? You think the company is also what? Is going down. But if they fix in new young guys as a part of board of directors, as the company, as those people, old people are dying, then the new guys are what? Are raising the standard. So you chip it in if you don't see anything like that. And if you see, if they give you the question and you see that they are all Igbos, they are all Yorubas, there's no Hausa, you talk about it. There's no balanced tribe or ethic. If they are all male, there's no balanced gender. If they are all old people, there's no balanced young people there. Okay? Then we can also talk about strategic tax planning. You can see that I only put 2 lines there too. The following tax planning can be employed. They say you should advise. In that requirement, what they put there is advise. And that is why we are advising. The following tax planning can be employed for effective planning. What are the things? Capital investment planning. They should ensure they are aligned with available tax breaks or incentive capital investment. For them to go into new projects, for them to do international transaction and the like, it means there should be incentives, something like double taxation relief should be there. So that when they are paying tax over there, they are not paying the same tax here again. So you look at all those areas and you bring them together. The next one is franchise structure optimization. You know, franchise means you are a company. You give license to another company to be using your brand name to sell your product. So they must be careful that since Spice executive summary, yes, it should be 2 pages. I intentionally give enough information. So what you are going to do when you get home now, get your 2 pages, structure what you want in the exam, structure it out. So I'm giving this enough information, but that is not the head. Broken? Has it broken? Hey, sorry. So what I'm saying is that you will get your paper, get your 4A paper. Are you getting it now? And make sure you structure, practice. And that is what affected me when I said in the first place. I have the pre-scene, I have the report, I have all the information. But saying when I get to exam, I will start jamming everything together. Do you understand now? When I get to exam, I was unable to jam them together. I was unable to put them together. It now become very difficult for me. So today and Sunday, you must have practiced that question. You must practice that report. This is how I want my report to be. No matter any other report I'm seeing, I'm not going with you. This is what I'm going to stick to. Do you understand? And it should not be more than that 2 pages. So you can get 2 plain sheets, 4A paper, front and back. Write your executive summary. Do you understand? 20 marks, put it somewhere. Get additional 8 4A. Use that one to write your report. Yes. Do you understand now? So I believe online are with me. So I will entertain question at the end of this report. At the end of this class. At the end of this class. But I want to deliver everything I have here before anything escape my mind. Okay, so you can see since Spicy operates through franchise, consider structuring franchise agreements in tax efficiency manner. This may involve allocating expenses and profit between the franchisor, Spicy, and franchises in a way that minimizes overall tax liability for who? For the company. Do you understand? Okay, let's continue. Then I think the 2 things you must talk about, the solid point here under this tax issue is transfer pricing compliance and capital investment and then franchise. That is why I bring those 3 points under here. You can see that I put my solid point under here. So Spice's internal transaction between divisions should be complied or should comply with transfer pricing regulation to avoid what? Tax penalties. After everything, you will do your conclusion. My conclusion is also wide. You need like 3 lines or 4 lines. 3 lines or 4 lines. Summarize my conclusion to no. It can be copy and paste, but it's too long. You will now. I don't need to put this on. I don't need to put this on. I think I can. You will say it that, and you will still be talking about what I'm saying here. Do you understand now? Let's read together. The financial performance and stability of SA have been strong over the past 2 years, but there are areas for improvement, particularly in operational efficiency and market share. By implementing the strategic initiative outlined in this report, you can allow that one to be there. Spicy Confectionery Limited is well positioned to capitalize on the growth opportunity in the confectionery market through its customer-centric approach. Innovative, you can reduce all this one.
Hello, can we hear you? Are you there?
Yeah, we can hear you. We can hear you.
Are you on?
And let's, I think time is going, for other subjects. So can you start? Let's start asking questions.
Hello. Hello.
My people, are we together?
Yes, yeah.
All right, so let's.
I hope you are looking at time.
Are you?
Mr. Taufik, remove your video.
Okay, so can we continue from where we stopped? Sorry, network is trying to throw off, but we are trying our best. Can we continue now? Online?
Yes, sir.
Okay, so we are done with conclusion. Don't forget to just summarize it to what you can remember in the examination and practice. When you are writing, when you are writing and practicing, you will remember what you have written in. But if you just read it, you will not remember. You may not remember everything. So it's when you read it, you write it, it will stick. Not just to read it and leave it. You have to write it somewhere to practice. So recommendation will give you more mark. That is why you need to give more recommendations. If possible, if you can give all these 5 recommendations here, you are good to go. You want to have in this solution a detailed review of the financial increase in income tax expense to identify any potential tax planning opportunity or issues. What we are saying is that you have identified the issues. So you are giving them what? You are giving them possible what? Solution. Then evaluate the company debt structure and repayment schedule to ensure optimal what? To ensure optimal utilization of financial resources and minimize interest costs. Explore opportunity for further expansion, possibly into new geographical market. Continuously monitor market trend. Ensure that the pricing of the goods and services transfer between divisions are set at what? At arm's length. You can read all this one yourself. You are good to go. Eh? Yes, under conclusion and recommendation, you will talk about requirements 1 and 2. So conclusion and recommendation is for both requirement 1 and 2. You don't understand now? Whatever you have noticed under requirement 1, whatever you have noticed under requirement 2, everything must be in your conclusion and recommendation. Are we good to go? Now, that is where once you put your recommendation and conclusion, that is where your executive summary stops. Which it should not be more than 2 pages. Now, either you finish that executive summary at half page of the second one, or is a full 2 page or 2 pages. When you want to start your full report, you must not start on that same page. You will now move to the new page to start your full reports. No. You just leave that line. You leave that page. Either it's only one line you write on that page to conclude your executive summary. You will leave it like that. You will go to the new page. Do you understand? Okay, so that is the end of executive summary. We will now go to main body of report now. The main body of report will start from introduction. The main body of report will start from where? From introduction. And what are the things you need to see under introduction? You will start, introduction will be another summary of requirement 1 and 2. Another summary of requirement 1 and what? And 2. Introduction will be another summary of requirement 1 and 2. But you are not repeating what you have said in executive summary. You understand? So let's read the way it is. We refer to the email sent to us, where we require to carry out a review of your company financial performance during the year and appraisal of new strategies, business proposal, copy and paste, except the business proposal. If it is business analysis, you put. If it is business proposal, you put. This report contains an evaluation of Spicy Confectionery Limited performance, which is sure, reflected in the extract of financial statement from year 2021 to 2022. If it is by geographical, you will say which reflected in the extract of his geographical financial statement, business units financial statement, division financial statement. That is the financial data you are using to analyze it. That is requirement 1. Then more so, this report also considers evaluation of management strategies of new proposed expansion. That is requirement 2. Are we getting that now? You are done with introduction. You will move on. What is the next one? The next one is assumption. Why do we need to put the assumption? Because all this information we have been talking about that you want to give the board of directors, we are not sure where they got all this information from. And we need to let them know. Do you understand now? So what is it all about? We said We were not told in the financial statement were audited. Is it true? Did they tell us that the financial statement were audited? We were not told. So good. So it's not advisable to rely on management accounts or when the third party is here to what, to verify it, to give his own opinion. But in your unseen, if they said this financial statement is audited, this one is not relevant again. Sure, we are getting it.
Yes.
Okay. This raise concerns on the level of reliability that can be placed on this analysis because it's not audited. Hence, they form the basis of the analysis carried out and presented in this report. It means all our advice we want to give, recommendation we want to give you are based on unaudited account, which is very dangerous, very, very dangerous for you to go with our report. What we have said here is like we are giving disclaimer that this thing is not audited though. If you follow us, now your own. No. Do you understand? Okay. Also, industry performance average was not provided to aid our evaluation on hospitality industry. So we don't know if the company is doing really fine. They only said confectionery is a leading company. For you to know that someone is a leading company, you must know other companies that are into that particular product. To evaluate, to benchmarking. Do you understand? If I want to say Mr. Staupik is more richer than Mrs. Our so if you want to know, do you understand? You will need to know the net worth of each person before you can now say that yes, they are a leading company. They can give you, if they give you, there's no need of that. If they do not give you, it's relevant. If they give you cost of capital in the exam, and that cost of capital did not tell you if a actuarial person, a professional person is giving you that particular thing, you will tell you that we are not sure about it. Maybe the management are just thinking of their head, our return. I'm putting 20 million in a particular project. I should be expecting 10% from it. Are we sure that we are going to get that 10%? Do you understand now? That is assumption. So under that, we will go to analysis of financial performance. So financial performance now, you will now see the difference between what we have done here and what we have done under executive summary. You can see under executive summary, we talk in depth. But here now, I picked profitability first. Because profitability is talking about the performance. And when I'm talking about here, you will be seeing me talking about the percentage increase. But in that place, I did not talk about any percentage increase. I was talking about the figure in depth. But here, I'm only talking about the percentage increase, which means in this case now, please kindly put this one there. Under this profitability, put appendix what? Appendix 2. It's appendix 2 that is talking about this. Under financial analysis performance, put appendix 2. So at the front of that, at the front of profitability, see, just open brackets, say, see appendix 2 and 1, or see appendix 1 and 2. Or if you don't want to put it at the front of profitability, you can put it under, at the end of this profitability, after all the explanation, you open bracket and see appendix 1 and 2. Yes. So it means if they want to see, they will need to go to appendix 1 and see what you have calculated. Are we good to go? So let's quickly go through the profitability ratios. The gross profit of SCL has increased over the last 2 years. Yes or no? That's the same thing we said there. The review showed that the gross margin increased from 44.89% to 47 points between 2021 and 2022. In the exam, if they give you 2023, which they are going to give you, you will say has increased from 2020. From has increased from 44.8 to the one of 2023. You can do it anyway. You can do it between the first year and the last year, or you can comment yearly. 44% in 2021 compared to 47 in 2022 and 50 in 2023. By that, you have talked about the whole 3 years. That is if you want to talk about Spicy as a whole company. If you want to talk about it as a division, in division 1, in division 2, now grammar, just know how to put them together. If it is per unit, you will put it per unit. If it is per geographical, in Lagos and in Abuja. Are we getting that now? Then, when you have talked about, you must tell us what has happened. What is the cause? The root of it. The root is this indicating improved efficiency in production and cost management. If the production increase, the revenue will increase. And if they are able to manage their cost, the profit will also will increase. The gross profit margin will increase. The next one is operating profit margin. Was also impacted with the increase to 26 from this to that. This indicating consistent consistent increase from 22.7 to 23.3 from 2021 to 2022. If you want to do it another way, you can say from 2021, from 22.7%, 23.36%, then, and in 2021, 2022, 2023 respectively. That is the way I have arranged it there, the same way I've arranged the years. Do you understand now? So you can do that one as well. Then the next one is profit after tax margin. Has remained relatively increased. I'm using this profit after tax margin because of the tax issue they are mentioned. I will have used, you can see after that I use return on capital employed, which is ROCE. I will do profit margin. I cannot do one anyway. I will do at least 3 or 4. Gross profit, net profit margin, ROCE, and return on equity or asset. But what they are talking about tax, that's why I'm talking about this one. So we will dance as they are moving. Okay? So this indicating consistent net profit. Then the next one is return on capital employment, has shown a consistent upward trend from 2021 and 2022, which, if you want to do it that way, you can also say from 2022 to 2023, which you will now mention those ratios respectively. And indicating efficiency utilization of capital resources to generate profit. You understand now? Then after that, you can summarize very quickly. Strong market position as one of the leading companies in confectionery market with a significant market capitalization can possibly impact its financial ratios. Market leadership provides economic of scales, pricing power, and competitive advantage over smaller competitors. The company can benefit from increased sales, economic of scales, and improved profitability. You know, this is a draft report now. This is main body of report. You should be able to write as many as possible. The more you write, the more you get. The more points you get, you write, the more points you get. It's not like executive summary. Executive summary should not be more than 2 pages. But body of report can be 10 pages, can be 8 pages, as you can write until they ask you. So when you continue to write, but make sure you cover the whole area, cover the ratio, this financial performance, cover business proposal, cover ethical issues. So if you are unable to write to get everything at once, you can write small about financial performance, leave small space. Go to business proposal, leave small space. Leave go to ethical issue, leave small space. and leave. You know that you have finished that one. You will be hearing them 1 hour to go, 30 minutes to go. When is it like 30 minutes to go? You must make sure you go back to all the space you leave and fill it up. You must not leave any space blank between. Do you understand? Because when you are so you cannot be writing report and leave space in between now. You know, doesn't mean you want to write report to me, you want to write letter to me now. You now leave 2 lines in between. What are you leaving 2 lines for? Space. Do you understand? So you must make sure you go back to that space you leave, fill it up. Even if it's something that doesn't just jackpot, let it complete. Then go to business proposal, jackpot. But what we have done is that the first thing you have written there is the main point thing you will remember, you are prepared for. Do you understand? But because you don't want to miss them, you don't want to lose them, you touch them. Do you understand? The ability to also connect and the ability exactly. The ability to connect your unseen to pre-seen is very vital. You know, this is pre-seen. It's like half page. It's like one part 1. And part 1 is not enough for you to pass. You must also understand part 2 and bring part 1 and part 2 together. But if you don't watch part 1 of a movie, can you understand part 2? The same thing. So if you don't understand part 1 very well, you will find it difficult to understand part 2. Do you understand now? We have watched Malin part 1, Malin part 2. You do not start part 1, you not start part 5, you not started from part 5. You will not understand it. So you have to start from part 1 and link the 2 together. Okay, I believe we are good to go with that. Let's go to the next one. So I have talked about profitability. I'm not talking about what now? Efficiency. Efficiency is talking about weakness and strength of the organization. And we look at it, it's talking about majorly working capitals. Has improved over the years, inventory days and receivable days relatively stable, while payable days on the rising. This suggests improved efficiency. You know, when payable is increasing, is good. When receivable is decreasing, is also good. When receivable is decreasing, when receivable and inventory is reducing, is good. When payable is increasing, is good. So when you look at the calculation we have done, you will see that that's how it happens. Receivable is decreasing, payable is increasing, inventory is reducing. So that is why we said the working capital is good. Including inventory and receivable payables, commitment to customer services and performance may have led to improvement. Anytime you are talking about each of these ratios, you must tell us what has happened, the roots, the cause of it. Do you understand now? And you can see it from here. Show the commitment of the customer services and performance may have led to improvement in inventory turnover, faster collection of receivable through better customer relationship. If you don't have good relationship with your customer, will you be able to collect your money? No. The ability to negotiate extended payment time with who? With suppliers for payable. They say, you must pay us within 2 weeks. We are your customer. You cannot do anything for us. We will do it jokingly. We will do it in the next 3 weeks. And they will agree. Then liquidity. Current ratio. Liquidity is talking about current ratio, quick ratio, and cash ratio. You can see that I only talk about 2 here, which is current ratio and quick ratio. If you have enough time, you can also talk about cash ratio. Do you understand? Current ratio in 2021 is 0.93 compared to 2022, which is 1.2. This shows that increase, we said is increase because in 2021 is 1 point. In 2022 is 1 point. In 2021 is 0.9. So the more is increasing, the better. But when you now go back to 2023 and it's now decreasing, what do? You will say Now look at it. Let's assume in 2021 it decreased. In 2022 it increased again. In 2023 it now decreased again. You say is not stable. Do you understand? You will say not stably stable. You can understand? Which shows increase in 2021 and a bit increase in 2022. However, it drops or declined in 2023. Do you understand now? Oyuboni, Emma Daboni. Now, grammar, because it's a professional class, they are expecting professional communication, conversation from you. So, quick ratio has increased. Make sure you also talk about the cost. Increase in an ability to meet short-term obligation. Quick ratio has increased over the years with 0.6 in 2021, 0.7 in 2022. This is indicating an improvement in the company's ability to cover immediate liability with its most liquid assets. Do you understand? That's why they call it quick ratio. You can quickly convert it to cash and cover your liability. So overall, investing heavily in expanding its production capacity or supporting auxiliary industry. These investments may have impacted profit overall. This significant decrease in loans and borrowing in 2022 suggests that SCL may have repaid a substantial portion of its debts, which have reduced the cash reserves. Are we good to go now? Then you also talk about solvency ratios. Debt to equity has decreased significantly in 2021 compared to 2022, which indicating a reduction in what? In the company's reliance on what? On debt finance. You know, when your debt is reducing, it means you are not borrowing again to finance your organization. It's either you are getting more equities or you are using your profit, your retained earnings, you are putting it back to the organization. Are you getting that? Just a minute, please. Anything? Want to join? Okay, sorry. We are actually, I'm coming. Sorry, let me just start to. So, are we good to go now? So that is likely what has happened for the debt to reduce. Okay. Debt to equity has decreased. So when it decreases, you know that the debt is reducing. If it's reducing, it's a positive thing. But if it's increasing, you will tell them that their debt to equity has increased, and you will tell them the essence of it. Because when the equity, then it might lead to highly geared. Do you understand? It might lead to highly geared. When this percentage is getting to 50% and above, it means the company is highly geared. And when it's highly geared, the company is running into big problem. They won't be able to meet up with the repayment and everything you've learned, you bring it in. Okay, the next one is investors ratios. Investor ratio is talking about dividend payout ratios. When you have adequate, return, you'll be able to pay dividend to your who? To your shareholders. So that is what that aspect is talking about. I believe you are good with it. So you can read this up yourself. So when you are now done with financial analysis you have done, you can see the way we did this financial analysis here is different from the way we did it in our executive summary. Everything we have done in executive summary, you can see that it's not repetitive. It's not copy and paste. That is how it must be. You must not say because I've written executive summary, I will not write everything I've written in executive summary to again is copy and paste and is an error. So we are still saying the same thing, but we are saying them in a different way. Okay, so after financial performance, That's requirement 1. Thank you. Requirement 1 under full report, under body of report. That's requirement 1. We will now go to requirement 2. What is requirement 2 talking about? It's still, we don't know yet. It can be diversification, it can be market expansion, it might be technology inclined. Anyone they want to do, you will analyze it. The way you have done it under executive summary, you will do it here, but you are not repeating the same thing. You will also tell them if the project is viable. There, you may mention the net present value there, but here, you may be mentioning something else. When you are writing under this body of report, you will be talking about two things: quantitative and qualitative. Quantitative is talking about figures, calculation you have done here. While the qualitative will be talking about other factors. Do you understand? That may also assist the organization. What are the other factors that may also assist the organization? If they go for this project, is it going to enhance their reputation? Is it going to damage their reputation? For example, you have seen that proposal and you notice that this proposal they are going for, there's labor child there. Child labor there. If they go for that proposal, what is going to be if the proposal is giving higher MPV? You know, if you calculate the first proposal, second proposal, and the one that is having child labor is giving you higher MPV. In here you say the diversification will give higher MPV of 0.5%. However, you will not mention the qualitative aspect. This company is used to charge labor. As a result of this may be giving negative what? Impact. This may be having negative impact on what? On the organization. Are we getting that gist now? You will now be talking about the negative impact. You will be talking about the positive impact of the project. For project 1, for project 2. For phase 1, for phase 2. Depending how to put it. For diversification, for expansion, for technology, for anyhow they put it, you will talk about it. When you talk about that, finished, when you are done with that, you will also talk about key risks associated with the proposal growth strategies. So if there are risks in the business proposal you have identified, you will talk about it. Or as a business as a whole, you will identify it here. What are the risks? Do you understand? You will see it in the case. You will identify it. Ethical issue that we mentioned in that place. I'm still mentioning ethical issue here. But the ethical issue I'm saying here is quite different from what I've written in the executive summary. They are not the same thing. Here I'm mentioning customer privacy and data security, which is very vital. Yes, you can copy and paste. Ethical issue, you can copy and paste. So when we are talking about customer privacy and data security, you know, they are operating online. And customer database will be there. And that is where you see all these cameras used to get all our information. They just call you. You are living in a Bagada. And someone just brought your passport to me. Or someone just said you want to buy this thing. They will download your data for you. And they have gotten your data from somewhere else. So there must be ethical issue that they must be able to protect data of the customer since they are operating online. Do you understand? Supply chain ethics. So those who want to supply raw materials to you, you must make sure they maintain ethical standards so that it will not damage your own reputation. Ethical will not be in any requirements, but it's just a must that you talk about it. In the first line, I talk about, you will see they say executive summary is 20%. Ethical issue is how much? Is 10%. So what will now happen if you don't talk about ethical issue at all? it means you have lost 10%. Do you understand now? So that's why you must talk about it. Then environmental impact. So how does the company, how they impact the environment, negatively or positively? If we look at it this way, they said why SCL has taken steps to reduce its environmental footprint. Footprint means pollution on the environment, okay? So including the introduction of green energy sources and recyclable packaging. That is, they can reuse their products. I mean, their material. Their, for example, your Pepsi now, bottle, you can see bottle is recycled. They used to use it, they will refill it again and use it. But plastic is not recyclable, Abi. Once you are done, you throw it away and they will. So, and it's affecting. That's why you can see if you go to canal anywhere, you will see all this plastic there. But it's very rare you see bottle on those things because that one is recyclable. So if their material they are using to produce, to package are not recyclable, the ethical standard is there. Ethical issue is there. They will pollute the environment. Do you understand now? So monitoring and mitigating factors such as greenhouse gas emission, waste generation, and resource depletion should be integral to SS sustainability initiatives. Okay, then we can also talk about supply chain ethics. We've talked about all those ones. After that, we can also find a place. You know, this is body of report now. You can write as many as possible until you are tired. Until they say stop. You cannot write and say, you cannot see someone that will say, I have finished. You not submit before the time. They never born that person well. The time will not be enough for you. You will not even finish. They will ask you to stop. They will give you 4 hours, 15 minutes, and still not enough. You understand? So you continue to write it to get that jackpot, write it until they say stop. But once they ask you to stop, once you hear 5 minutes to go, quickly go to the last page and round it up. Junior training for Chuku, Emeka, and Co. Whatever, and sign, and that's all. You will get half mark there. Do you understand them? Let's continue. Then, because they are talking about strategic tax planning, that is why I also talk about this planning. So the following tax, they said advise. And for you to advise, these are the advice you are going to give them. Cost incurred in the research laboratory for creating new products or improving existing one may qualify for tax relief or tax credits. Online sales tax management with local and international tax laws regarding online sales. Understand adhere to facts. You know, there's going to be VAT. You must know if it's vatable or not vatable because it's a processed food. Once it's a processed food, it is vatable. If they are raw material, they are not vatable. So you must know and understand. Regulations for online transaction includes cross-border sales if applicable. If you are buying from other border, other country, tax compliance and reporting. You must compliance with tax. If you are filing, make sure you file on time. If you are withholding, make sure you are withholding. If you are paying your company income tax, pay your company tax as at when due. 21 days for what? For FATs. For that 21 days for withholding tax, Abi. Then for payee, 10 days. For income tax at the end of the year. So you must make sure you know all this tax law. And if possible, according to value added tax law in Nigeria, according to company income tax acts in Nigeria, that one alone, they will say, this person know what he's doing. They want you to use everything you have learned in our. Now, in case they not talk about business analysis, we can use SWOT, you can use Pestel, we can use Potter's 5 diamond. So what are these things talking about? So let me just talk about it. But in a question where they don't ask you to use business analysis, you can just pick SWOT analysis. Just write SWOT analysis and leave the remaining one out of it. At least for you to know, for you to have business analysis. If it's not there, they will not cancel it. If they not expect you to write it, they will not cancel it. They will not remove your mind before you talk, because you talk about it. Do you understand? And if it's something they expect you, they will mark it for you. So there's no crime in putting that SWOT analysis. So everybody, let's put SWOT analysis on it, even if it is business analysis or not. But majorly, if it is business analysis, you will talk about these three things, except they specify that you use this particular business analysis. Do you understand now? So let's talk about this now. Using SWOT to analyze SCL. Their strengths, strong bond recognition. You are going to identify, when you're talking about strength, you have high quality products. They have diverse sales outlet or channels. You know, it's a strength to them. So I can decide to use online. I can decide to use outlets. I can decide to use franchise. I can decide to use corporate. That's a strength to them. So that is strength. Then advancement. They are using technology. Commitment to sustainability is also a strength to them, because from that they will get more customers. This our online pre-scene I did is also social responsibility I did. Yes or no? I just open it for everybody to join, and almost 1,000 people have watched that video. Do you understand? On YouTube. Then from that 1,000 people, I was able to get at least maybe like 10 people. They said, I watched your video on YouTube. Some of them are online. I watched your video on YouTube. I want to join the class. So what I've done is social responsibility. But from that social responsibility, revenue can come. So that is area of sustainability. Are we getting that now? Then weaknesses. What are their weaknesses? Weaknesses will be internal things they are doing that is negative. Potential out dependency on Nigeria market. If it depend only, they said they depend on Nigeria. So if depend on Nigeria alone, they may end up in a, because they have other opportunity, they have other people they can go, other country they can go to. Another thing is product line vulnerability of raw material price volatility. So the price is not stable. Raw material is going up and down. And when they are unable to buy raw material, it will be difficult for them to produce. Do you understand? So those are the weakness you can see from there. Then when we are talking about opportunity aspect is talking about external positive you can tap in. Strength and weakness is talking about internal. Opportunity is talking about what? External opportunity you can tap in. And what are the external opportunity? You can expand your market. Do you understand now? You can go into line of product expansion. You can leveraging on e-commerce growth, that is online, e-commerce. All your product will be selling it online. Then when you're talking about threat is also talking about external negative aspects that could happen. It could be intense competition. You just see competitor all around you, and you'll not be able to compete with them again. Then changes in consumer preferences. They can just decide, see, don't go to that, don't buy Coke again. I don't like Coke. I will better go for Pepsi. Preferences towards healthier option. If they see something that is more healthier, they will ignore that. They will ignore your product and go for someone that is healthier to them. Then economies downturn. Anything can happen. You see, most companies are closing down now. So affecting consumer spending. It can be government policy. Government can just rate one policy that will bring down the company down to the whole thing. So that is how you can use SWOT analysis. If you are using Pestel, in case they ask us to do business analysis, we have political, Pestel, political, economic, technology, environmental, legal, Okay, so when you're talking about political, you are talking about stability in Nigeria government policies affecting the business strategies regulations. So in the case, you are going to see something that it will affect the company political way. So you have already discussed this now, that political stability in Nigeria government policy affecting business. In the company, they will say something about that policy. You will not state it. Do you understand? From the case, this particular policy that just introduced by the Nigeria government may affect the production, may affect the profitability, may affect whatever is going to affect. Then when you go to economy growth prospects in Nigeria, fluctuation in disposable income of consumers. You will also look at it. There's going to be, when you're talking about economy, we are talking about exchange rates. We are talking about inflations. You understand? So you are going to look at it from that case, and you will try to align with it. Then social changes in consumers' tastes and preferences, health and conscience. This one is talking about religion. This one is talking about customs. I mean, the custom of the land, traditions. This one is talking about Yoruba tribe and the like. Do you understand? So you will look at it. If the tribe will affect the sales or will affect the company. If the custom of these people will affect it and the like. E-commerce, online marketing tools. You will mention all these aspects. Then environmental pressures to adapt to more sustainable practices, waste management and regulations. If they are doing fine, you will say it there. They are doing better in sustainability under environmental analysis. Do you understand? You talk about all this. Then legal, compliance with food safety and standard labor laws. Okay, if there are some laws that are not okay, so you can use Portal 5 forces, which is talking about the threat to new entrants, bargaining power of supplier, bargaining power of customer, and threats of substitute products. You can also talk about balance scorecard. So balance scorecard is talking about revenue growth. It's talking about customer, it's talking about internal processes, it's talking about learning and growth. All these things will be used if they ask you to use business analysis. But if they don't ask you to use business analysis, you can only talk about SWOT analysis and paste and move on. If you want your report to be full. Then Asford matrix. Asford matrix is talking about market penetration. It's talking about product development, market development, and diversification of products. Do you understand? So you can also read all these aspects. Once we are done with all this one, you will now conclude. You can see that my conclusion here is no more than 3 lines. The financial performance and stability of SHL have been strong over the past 2 years, but there are areas of improvement, particularly in operation efficiency and market share. Then when you are done with that, you will now talk about the requirement 2 also. What is your conclusion about requirement 2? You just chip it in like 2 lines or 3 lines. Are we good to go? Then after that, you go to your recommendations. Your recommendation must be much. You must give as many recommendations as possible, because that is what is going to give you more mark. It's very short. Yes. Yes. In your conclusion, you will talk about recommend 1 and 2. Okay? You just briefly what you have noticed. The recommendation 2, you will talk about as many as you have. So you can see here, to address the challenges and capitalization of opportunities identified in our analysis, we recommend the following strategies initiatives. We talk about diversification, diversified product portfolio. We talk about strength financial position. We talk about monitor industry development. We talk about tax planning strategies. If you look at this recommendation, you will see that they are never the same thing with what we have written under executive summary. They are not the same thing. Totally different. Okay? Then, after that, we have additional operational efficiency, we have market expansion, we have sustainability initiative. And you can see that is the end of that. You will now start with your what? You will start with your appendix. I mean, you are starting with your appendix first. You know, you started with calculations. You can see the way I arrange it, this is how it's going to be. Your appendix will be the last. And for you to do that, it means you must have less space for all we have been saying since morning. You will leave space from executive to this point. Are we getting that now? So appendix 1. This appendix 1 you are seeing here is what we have talked about. It's what we have talked about in that Excel calculations. I just pasted it here. Then appendix 2 is what we have talked about in appendix 2. Are we good to go? Then appendix 3 is what we are going to give you as business proposal. Are we getting that now? Yes, thank you. After that recommendation, you will put your name. You put your name, junior, you start with junior trainee, whatever they call you in that case study. I think they said trainee, Abby. Junior trainee. Is it trainee?
Junior trainee.
Before that, okay, trainee. Thank you. So you put audit training. Do you understand? No, then will be the last one. You say audit training. You put comma. You will sign. The next line you sign. Then the next after signature is your name. But your name is John Adeshola. Do you understand now? Your name is John Adeshola. So your calculation will not be at the back. So if possible, I will advise that you leave 2 pages for executive summary. Leave like 8 to 10 pages for body of report. Do you understand? But in a situation whereby you did not finish the space you left, you will fold it in between. You fold it so that there will not be blank space between your report and your calculations. Do we get that now? So that is how it's going to look like. Then we go to proposal, business proposal on scene, the one they are going to give you. If it is business analysis, you put business analysis there, and you also do that. And that is all. So now let's entertain questions. We have used, okay, this is 4:40. So we still have almost 1 hour to go. So now let's open the floor now for questions. I believe I must have answered most of your questions. Okay, before I entertain questions, sorry. Let's try to write this thing somewhere. The way you are going to, let's call it time management. Time management for case study. Time management for case study. Number 1, the first 15 minutes should be used on pre-scene reading, or should be used in reading pre-scene. In reading on scene, sorry. The first 15 minutes should be used in reading on scene. That is, you are not expected to read pre-scene when you get there. That first 15 minutes they give you, use it to read your on scene and understand it very well. That is first 15 minutes. The next 45 minutes, use it for calculations. Use it for calculations of requirement 1. 45 minutes. The first 45 minutes or next 45 minutes, use it to calculate the requirement 1. That is ratios, trend analysis, and the likes, etc. Next 20 minutes, or let's say 30 minutes, next 30 minutes, should be used to calculate business proposal. Next 30 minutes should be used to calculate business proposal. Next 30 minutes should be used to calculate business proposals. So either is proposal 1 or proposal 2. Make sure you use that 15 minutes to settle your matter with them. Are we good to go now? Now, listen to this. Once you use 45 minutes on ratios on requirement 1 and you use 30 minutes for requirement 2, either you finish it or not, leave it and run away. Don't say I did not finish it, I must finish it before I go to body of report. No. Once you have used that minute you allotted for it, and it's not enough, leave it and run away. Calculation does not determine your passing. It's the report that will determine your passing of case study. Okay? So, how many minutes have you used so far now? We have used 1 hour, 30 minutes. Yes or no? We have used 1 hour, 30 minutes. We have used 15 minutes. We have used 45 minutes. That's 1 hour. Then we use another 30 minutes for business proposal. That's 1 hour, 30 minutes. Now, the question is 4 hours. It's 4 hours question. So, which means we have how many hours to go? We have about 1.5 hours to go. Is it more than? No, it's more than 1.5 hours. We have about 2.5 hours to go. Am I right? We have about 2.5 hours to go. So use 30 minutes for executive summary. Or let's say use 40 minutes for executive summary in case. Use 40 minutes for executive summary. 40 minutes for executive summary. Then the remaining 1 hour 15 minutes. The remaining 1 hour 15 minutes. The remaining 1 hour 15 minutes, use it for the reports. The remaining 1 hour 15 minutes, use it for main reports. If you follow that timing, I bet you will conquer the case study. Case study is time consuming. And you must not stay, and it's in segment per segment. So you must avoid staying in one segment for the whole day. Okay, so I can now take questions now. And with you, who is ready to give the questions?
Good evening, sir.
Evening, sir.
Regarding on what you are saying about requirements 1 and 2, where we have to do space of like 8 to 10. You make mention that if that no spaces will be available, and if there arises any space that will be available, you should fold it up. What do you mean? Please, can you give me your thoughts on folding the space in between the lines?
Okay. You know, they are going to give you exam scripts on that day. And exam script is going to be like, let's assume it's 20 pages. Abi, because for case study, it's a special paper for case study. So let's assume it's 20 pages. Do you understand? But because you have to start with your calculation, you will open it to the middle of that exam script, which means you have already left how many pages behind? You have already left 10 pages behind. You will now start your calculation from that 10 pages towards the end of the paper. When you are not done with your calculations, you will go back to the front page and start with your cover page, executive summary, and draft report. Let's now assume that when you are now writing your report, you are unable to consume the whole 10 pages you have left. you are only consume 8 pages because of time. Do you understand? You will have how many pages in between? You will have 2 pages in between your normal report and your calculations. So what do you need to do? You know, if you leave it like that, if examiners are marking, they will say, this one did not even do any calculation. You only write the report. So you will now fold that blank pages so that when they are marking, they will see what you have written as a report, and they will not go far for them to see the calculations. And that is what I'm trying to refer to. I believe that one is clear now.
Thank you, sir.
Is it clear now?
Yes. I want to about assumptions and dissertation. Are they the same thing?
Assumption and what?
Dissertation, or we can call professional skepticism.
Yes. You can call it assumption. You can call it limitation. You understand it? Limitation, assumption, whatever. If you see different reports, you will see different. We are all using different grammar because it cannot be the same thing. But we are saying almost the same thing. It's just the heading that are different. Do you understand? So if you have assumption, you don't need to put limitation again. Any other question?
Yes, so can you hear me, sir?
I can hear you.
Okay, sir. The area I need to appreciate your patience and this, but the area I want to ask is this. The company profile, when we are writing to an external report, and the company profile has to be the company that we are writing the report to, do we need to still write profiles to the people that owns the company, who knows better about the company than us? What is the essence of that profile? Because I have got some areas where last time we write this in, they say that if you are writing an internal report, you are telling them about your company. But when you are writing about external report to the people that owns the company, do you need to still write profile about the company to them, the directors of the company who are owning the company? So I want to get it clear, sir.
Okay. The major of that company profile is to tell them what they are doing fine and what they are not doing right. Do you understand? If you take any, you are seeing yourself as an external auditor or as a consultant. Do you understand? In this case. And for every audit firm you see, if you see any financial statement, you are going to see brief about the information. And you are still going to give them that financial statement to sign. Are you saying that they don't know about their financial statement? No. But because this thing we are talking about is another person, external people will also look at it. Do you understand? They may want to take this report because this analysis you are doing is not only meant for the board of directors. They may want to get loan. They may want to get any, this proposal they want to do. They want to show, if they want to go to bank, want to borrow money from bank will ask them, bring your audited financial statement and bring your feasibility report. Bring your report, bring your draft report. These are the things they are going to supply to them. And by the time they read everything, they will have idea because of external people. They will have idea, okay, this is what you are doing fine. Oh, you are taking care of the environment you are working in. Okay. Oh, your board is not well structured. By the time you mention all these things, they will understand. Even the board is as an avenue for you to communicate what the board are doing fine and what they are not doing fine. And that is the essence of putting that company profile. Do you understand?
Okay, so
exactly.
The only area I'm not clear about is that when you talk about using it for external issues, I thought the disclaimer we put there simply means that it is not meant for external use. Are we putting disclaimer for it to be, because audited account, that one you are using it for this, but when you put disclaimer, is it also properly for external use for other people to use when we put disclaimer?
Anytime you are putting disclaimer, you are only be on a safer side as the person who have analyzed the financial. Do you understand now? So you don't want the external to rely on it. Those who want to invest in now, maybe they put this draft report somewhere. They put this report somewhere, and someone just see the report and they notice that this company is doing fine. Oh, and they put their whole money on it. And as a result of that, they now later notice that the report you are giving to them is based on management account, not audited account. They can come and sue you. That is auditor liability. Yes or no? So you are only putting that disclaimer, you are only trying to run away auditor what? Liability. That is why you put disclaimer. Other is internal and external. And as a professional, maybe you have audit firm, you are a tax consultant, you are a business advisory, you must make sure you put that disclaimer so that you will not be liable to any liability that is coming up. And that is the essence of doing that report. However, putting this disclaimer or not putting disclaimer is just small mark in your report. But it's something you can just use to fetch small mark, gather them up and down, and you are good to go. Is it clear now?
Yeah, it's clear.
Okay.
Hello, sir.
Hello, ma'am.
Yes, sir. So my question, I have two questions. Number one is, like, assuming I've done my appendices, that's maybe appendix 1 and appendix 2, and somewhere along the line, I made a mistake. I did, normal exam condition, and maybe I didn't know I made a mistake, and I used that same calculation I made to write my report. Is there like, I'm using, what are the mistakes I've made, as in somewhere along that I just made mistakes and I use it to write my reports. Is there any problem, as in, will there be a fallout on my marks or?
Yes, now, even your calculation is not correct.
Correct, okay.
And when your calculation is not correct, it will also affect your report, because these people, the essence of referencing your appendix to what you are saying is for the examiner, for the marker to look at what you have said and go back to your calculation and see if it is the same thing. So if you are saying something else on your report compared to what you have calculated, they will know.
What I mean is based on what I'm calculated, yes. It is what I'm reporting on. Like I'm supposed to get, maybe due to calculation error, I'm supposed to get like 10 and I'm getting 15, for example. But in my report, I'm putting that 15.
Okay. So what you have calculated is the same thing with what you are reporting, but your calculation is initially wrong.
Yes.
Okay. Now we take a special prayer point. Now we take a special prayer point for the examiner, not to notice.
I will not notice that.
I know that for every mark your paper, they have their answer by their side. So they are looking at their own answer and tracing it to your own answer. So if what you have done is not colorating, if it's not the same thing, at least it should be very closer to each other. So if they're not getting closer, they will be seeing that this person has done something wrong. Do you understand?
I do. Then number 2 question, like I'm doing trend now, if I'm doing trend and I don't want to waste time on my calculation. Like, for example, I'm doing trend of income statement. Can I do revenue, go to gross profits, go to profit before tax and profit after tax? Can I do just
exactly
those 4?
I've said that before. You won't be able to attend to calculate all the ratios. Do you understand? You won't be able to calculate all the ratios, but you can select the aspects you are going to calculate. Okay? So you can choose the line items calculations, probably revenue, like you said, gross profits, like you said. Then you can also talk about tax aspect. Just look at the main aspect, because the time will not be enough for you, no doubt about that. Just make sure you do as much as possible to touch that vital area.
Yes.
Are we good to go now?
Yes,
so you must, that's why I said you must work with your time. Once you see that the time is going beyond what you plan for, you will run away from it. Do you understand? So you do the normal thing and run away from it.
Okay. So
Are we
lastly, sir,
good now?
before lastly, this
Are you
our
okay?
exhibit one. Yes, I'm okay with that. I just want to ask
I
one
think the
more
network is. Let me
question.
try to use. I don't think she's talking for now. Let me see.
I'm talking.
Let me try to connect. So can you hear me now?
Yes, I can hear you, sir.
Yeah. Okay, so
I
fine.
said
So
one more question.
okay, go on.
Like this are exhibit one now, where we have advising your client on strategic tax planning strategies for optimal liabilities. Like, what if in the exam, in the unseen now, is it possible that we see something like on calculation on tax?
Cannot be predicted. They can do anything undo. But if they give you tax calculation, it's going to be something you can do using your advanced tax knowledge and then normal skills knowledge taxation.
Okay.
So it's something you can do. But the major thing is going to be how you will advise them. And those are the points we have identified.
Okay, sir.
Yes.
Thank you, sir.
All right.
Good evening, sir.
Hold on, sir. Sorry, sir. Someone want to ask physical here. Okay. 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 I will do that one within few minutes after the class. Okay. What is asking is the question is what if you have geographical financial statement? How are we going to do trend analysis about that one? So I said I'm going to show that within 10 minutes on the board when we are done with this class. Okay, so your question, sir. Good evening, sir.
Good evening, sir.
Yes, sir.
Thank
Who am I
you for
talking
your
to? I'm only
patience
seeing
and good work.
I'm only seeing 7490.
Hello?
What
Can you
is
hear
the
me, sir?
name, sir? I'm only seeing. I can hear you, but I'm only seeing 7490. What is the name, sir?
Ibrahim Olatunji. I'm surprised.
Or is because that's what you use. You didn't change your name on the Zoom link, but no problem. Go on, sir.
Okay, so my question is actually what my brother that is attending physical actually asked, but my own is that you said, according to this precinct, we have financial statement that covers 2021 and 2022. And you said definitely they are going to give us 2023. So what I want to ask is that financial statement given to us, is it for the entire company as a spicy confectionaries, or if it is going to based on the divisional or unit, are they going to give us the financial statements based on divisional or unit?
Okay, this is how it's going to look like. They are giving you financial statement for 2021 and 2022 for spicy. They will give you 2023 for spicy again in unseen, making 3 years financial statement. They will not give you either geographical financial data or business units financial data or division financial data. Do you understand now? So when are you going to use spicy? When are you going to use geographical or business units? They are going to direct you in the requirements that analyze so units. It means you are using their financial data units. If they say geographical, it means you will use financial data of geographical. If they say product, you will use the one of product. Do you understand?
Okay.
But in a case where you are using the geographical or business unit, you know, when you are doing geographical, you also need to do the business, the company as a whole. You will now put the one of spicy as a whole by the side. Do you understand? I'm going to demonstrate it on the board very soon for us to understand what I'm saying.
All right, sir. More question is under this exhibit 1 to 4 given to us that we are still expecting additional exhibit. Is it that each exhibit will have their own requirements?
No. The exhibits, all the exhibits are all continuation of case. The story is like a story they are telling you. Do you understand? That requirement is for whole exhibits.
Okay.
That two requirement is for all exhibits. From exhibit, even they give you 20 exhibits. That requirement is for that 20 exhibits.
All right.
You understand now?
Thank you, sir.
Yes, sir.
Sir, can I ask this particular important question?
Okay, sir.
Last time I wrote this case study, and what made me to fail was that I based on calculation, and it's my
Hold
first.
on. We want to hear that vital important question. I don't know what happened to this thing. Why it's going up and down? Is anyone with okay, Shall okay, like edge. Thank you, sir. That one makes sense. Okay, thank you, sir. I'm coming online. Just hold on.
Okay, sir.
Okay, online. Can you hear me now?
Okay, so I can hear you very well.
So go on with your question now.
Okay, so what I'm saying practically is that I didn't have experience, so I was basing on calculation, and then before you know it, I didn't write much on my body of the report. But then my colleague that wrote the same exam never did any calculation. He did not try any calculation, and he passed. So what I want to ask is that, like what you are saying, which is true, calculations does not attract much mark, but more or less so. Do we, all these calculations, is it possible that even if one did not write it, one will still pass?
That's what I said.
Instead of somebody to calculate and what you write and what you calculated, there is a mismatch. It did not match. Is it not better you analyze even without calculating?
You can't do without calculation. Do you understand?
Okay.
That your friend that said he did not do calculation doesn't mean he did not do calculation at all. He did, but he was not satisfied.
Yes.
Asking very it's not that you did not do it at all, but you are not satisfied with what you have done. So there's two different things there. So what you can do is that's what I said. Once you use 45 minutes on the calculation of requirement 1, where you stop, leave it. Go to requirement 2, business proposal. Use 30 minutes. Anywhere you stop, you finish, you not finish, leave it. Your main game changer is at the report. So don't waste your time. Don't say, I must finish this calculation. I must do this calculation. Not those people that are giving you calculation, and even if the calculation is right as a prediction, and you enter examination hall, if you finish it, you not finish it, it's not more than 20 marks. Do you understand now? That's the maximum you can get on the calculation. So the main thing is the report. That is where you are going to get your full mark. So you can see executive report is 20 marks. Ethical issue is 10 marks. All these 10 marks and 20 marks, they are both in the report. The report itself, let's say it's like 60 marks. So 60 plus 30, how much is that? 90. So it means 10 marks for calculation. Do you understand now? Yes, but you cannot write your report without the calculations, because you are going to use the calculation to write your report.
So what I'm saying is that if you look at our income statement, you can even analyze some without calculation.
Exactly. Like what? Under our executive summary now. Under our executive summary, we not do any calculation now. If you look at this report, under our executive summary, we not do any report. We only did in-depth analysis on it.
Okay.
Do you understand now? So you can first do even before calculating, you have to do your calculation. You can do your in-depth analysis on the executive summary. You know that 20 marks is there.
Okay.
But it's better you work on that calculation first. Because once you are done with your calculation, you know that your brain is already switched from calculating to writing report. You know, there are two different things. It's like you are writing mathematics and you are writing English. You cannot be writing math 1 minute, go to English and write So you have to finish one and focus on the other. And it's better you put that energy in the morning on calculation. Do you understand? Attack with calculation. Within 1 hour, you are done with calculation. Then come back to report and start doing your jolly work. So
Okay,
case study information, it's not difficult. Many people are failing it because there's no adequate information before you go to the exam. So if you have the adequate information, it's something you can do this, don't do this. This is what you are going to do. You are good to go with the case.
Okay, so
Okay, sir.
then, finally, sir, are there specific places you can put professional skepticism? And you didn't mention about it. Is it the same thing with ethical issues, professional skepticism? And is there a particular place, or it can fit in anywhere?
Well, what I'm going to say is that just follow that report, all the things I've analyzed. Just follow it. However, you are not limited. If you see something else that we overlook this, so I think this one should be there, especially in your unseen. You know, I will not be there with you in the unseen.
Yes.
And you see something that makes sense. I think this one should also be part of my report. This one is also vital. You will put it there. Do you understand? So we have financial and non-financial. So if you see something financial, like here now, we are analyzing, there's no cash flow. How do you want to advise the management when there's no cash flow statement? You can also address that. But in your exam, if there's cash flow, you don't need that again. In the exam, if they say this thing has been audited, you don't need, it's not audited again. You will look for something else to tell them as an assumption. Do you understand? So it's just a matter of putting everything you've learned from skills, foundation for those who started from foundation, ATS, professional, putting everything together. In your higher institution, your university, put everything together. If you study accounting, sure now. Anything that is relevant costing here. Okay, any other questions so that I can just do small analysis for us?
Good
evening, ma'am. Evening, ma'am.
Okay, my question is, I'm zooming in the unseen.
Okay.
We're now giving another financial statement on a leading industry, a leading company in the same industry.
Or competitors.
Yes, competitors, for us to compare. Now, if we are told to prepare the analysis, which is the ratio and trend, are we going to prepare the trend analysis and ratio of the competitors' company and this other company, this particular company? Are we preparing the financial performance? I just want to know.
Okay, so I think that's another area they can still come up. You know, I've mentioned they can give you business units, they can give you geographical, they can give you division, they can as well give you business industry. Like that is another company that's very related to Spicy Confectionaries Limited, that they are doing the same thing. Do you understand? Almost the same thing. So they can give you like two companies. So they want you to compare Spicy to other companies to know if they are doing fine. So what they're going to do, in that case, they have already given you the industry average. So you just compare with them. You can do small analysis. You can do your okay. So I'm going to demonstrate everything on the board. So I'm going to show that on the board too, so that we can see. Do you understand? I'm going to show that one on the board. Let me see. Is there another question? Apart from that,
sir, please let me take this last question. Like May 2023 now, where they gave us Dudley and Castle.
Okay.
In the precinct, they gave the financial this thing P&L of for Dudley 2018, 2019, 2020. Now in the unseen, they now gave another this thing entirely Castle, which is their margin. Now, my question is, are we going to prepare this like she asked, the trend for and the ratios for Castle and Dudley, or Castle alone, the one in the unseen?
That is the same thing as industry average. So I'm still going to talk about that too. So when I
No,
explain that,
sir, please,
you
one
see,
more. No, like this one now, they said they want to merge, as in merge, not like a competitor.
but Cassie is another company entirely.
Yes.
And another one is also the other company is also company entirely. So you will
Yes, sir.
analyze three of them now. You will analyze the three of them differently. Or but you can, yes, you analyze three of them entirely, but you will do it together. You can do it in a one table.
I think in that diet, they only ask them to analyze for the company they are acquiring.
Exactly. So they will tell you what to acquire. So if they want you to analyze spicy, they will tell you. Just look at the requirement. Just look at the requirement. They will direct you on what they want you to do.
Okay.
Exactly. So
Thank
if
you.
they want you to analyze cabri, or what do you call it now?
Castle.
So you will analyze both of them. You want to know if it is healthy for your company, spicy, to go into that company to acquire them. It's like you are doing due diligence before you acquire that company. You want to know if they are doing fine, so that you not go and carry liability and say you acquire other company. But you are going to see everything under requirement.
Yes. Thank you, sir.
Yes, sir. So any other question, so that we can just demonstrate within 30 minutes. So you are satisfied? If you are satisfied now, it means you are ready. Exams should just come tomorrow. Okay, how with you?
So I have a question. So
all right, sir.
The other time when you were explaining about the unseen, on the reports, the main reports, I think my network. I want to talk about just clarity. When you're analyzing the pre-scene, you said when you were talking about the under the main report, like we should not take a position. So, but
we should not
if I'm not writing the report, like we should not take a position. We should not be positive. Now, if we're now report, I have a question. Hello? 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 Hello, sir, are you there?
Hello? Hello? I think what he needs to do is to drop the report so that we'll have time to do other things.
Hello?
Okay, sorry, Mr. I don't know, maybe it's Mr. what? Olarewaju Abi. So you can repeat your question now. Sorry.
Yes.
Yes, go on.
So what I'm trying to say, the other time when you're talking about under the future business plan, you should already give us the under the summary. We should not take position. We should probably tell them the positive and negative side. We should not advise them to do this or that or not. So what I want to ask, when you're not doing the main report, are we to take a position or we're still to maintain the same thing? Right, the main report.
Sorry, can you take that question again? Your network is not stable, that's why.
Okay, I said the other time when we were talking about for a full plan, we should not take a position. We should probably be in the middle. We should talk about the positive, negative, the positive impact and negative impact. So now under the report, when I think in the report, do the same thing. We're supposed to take a position. Maybe we're supposed to advise them on maybe on the positive side and now tell them to, or we should just maintain the same. We should be in between.
Okay, so okay, fine. So when you are talking about your business proposal under executive summary and under normal full report, you don't need to tell them directly that they should go for this project or they should not go for this project. You will only tell them this project will give you this return. This is what you have. You will tell them about your findings about that business proposal. Then after your findings, you will tell them the negative about the proposal. If they go for this proposal, this is likely they are going to see, and they are going to give them the positive aspect of the proposal as well. So you will sit on the fence for both, either under executive and under full reports. Are we good to go?
Okay, sir. Yes, sir. Yes, sir.
All right. Okay, so any other questions? Do we have any other question in the next 1 minute? So for those who wrote, is this same with 2024 business analysis? Which one is business analysis again? How do you structure it when you are not seeing the unseen? I don't understand the question. If you can unmute yourself and ask. So for those who have written this case study last diet, or for previous diets, and maybe something happened, something came up, you can share your experience. What you notice that you have done wrong in that question, last diet or previous diets, that you think that I think this is what I've done wrong, so that everybody or other person can learn from it within 10 minutes. Then I can also add more about it in the next 10 minutes or 5 minutes. If you have anyone who want to share, that's a good one. But if you don't have anybody, no problem. I will just look at the calculation.
Hello, sir.
Okay,
Can
sir.
you hear me?
I can hear you, sir.
The only thing I want to share is that this pattern of writing case study, cover page, introduction, executive summary, all this. As we are writing, I was advised that we don't need to say cover page, you say executive summary, you say it's just like a rater, but we know that these things are formal like that. But are we going to put, like, for instance, when you want to write executive summary, write executive summary as a caption, you now start writing under it, or you write body of the, all those things. I don't think they're supposed to be inside the letter that we are writing, the report we are writing.
And they are going to be there. If you want to write executive summary, you will write executive summary at the heading and you underline, but don't use red pen. The same pen you are using to write, use it to underline, just to make your work neat. You know, when you are talking about executive summary, I will know that you are now talking about executive summary. When you are now talking about company profile, I will know that now you are talking about company profile. So it will make it easier for those who want to mark your exam. You know, one thing, if you look at the requirement, they put the arrangement there. The way you arrange your work, it makes it easier for them to know that this is what you are talking about. So don't give them too much headache. They will say this one doesn't. Don't frustrate them. Make it simple for them. You don't want to frustrate them. So if I'm talking about executive summary, write executive summary, but you don't need to write in capital letter. Okay, you don't need to write in capital letter, but write it in that. Write the first letter capital, the remaining one small letter, the next one just in cap. Just first word in cap, second one in cap. Do you understand? And underline like 2 lines under one. Do you understand? You can go with your ruler. Then you talk about it. The way I've explained, the way I've structured that report, follow it. You will see that this is what we have been using, and people are passing the case study. This is also the format I used when I was writing my case study too. So it's the same format. Just follow the format. Do you understand?
Okay.
Okay, sir. That's that. Okay. Yes, that's what I'm saying. It's not that it's not that they did only requirement 1. You will touch it a bit. Financial analysis, Abi. Yes. Okay, this solution. And now that's why it's important now. Are you joking? For people to pay for precise solution. This precise solution is what you are going to write in the exam now. The only thing you want to do is not that you are going to copy and paste. There are going to be additional information you need to factor in that will change something a bit. But this precise solution you have with you, that is the real game changer. Do you understand now? But you must know how to use it. If you have, we have analyzed only 2021 to 2022 year, and they are giving you information about 2023. You now ignore 2023 all through. You are not talking about 2023 at all. You're only talking about 2021. What happened to the new information you got? So you must be able to bring in that new information just to extend it. You have all the information already, just to extend your report. That's all you need. Do you understand? So this report we have, this draft report we have, you must take it as your companion for passing case study. Do you understand now? Yes, sir. Online.
Yeah, I understand what you're saying perfectly well, but I think that was the issue the person that was talking about Castle 2 diet ago was trying to raise, whereby I won't say the precinct is as good as useless because everything in the precinct, they don't even want you to touch it. Just like the way they did last diet, it was just kind of slightly different, whereby they give us the consolidated in the precinct, and when they are bringing the what do you call it, the unseen, they are now talking about the strategic business units. Meanwhile, the strategic business units they gave us is just like the consolidated one. The strategic business unit is the breakdown of the consolidated they gave us earlier, and they don't want us to even analyze the consolidated. They wanted to analyze the strategic business. So I think this recent report is actually important, but at the same time, when in my own view, I think it's very, very important for you to know what to do should the case circumstances changes inside the exam hall. Because like 2 diet ago now, the circumstances change completely because everything in the precinct is as good as you don't even need it.
Exactly. Do you understand now? But because you have already studied precinct, you have that background knowledge of what they want to do. So that is why I say requirement 1 and 2 is the key. Whatever they mention or whatever they ask you to do in that place, if they ask you to prepare to analyze consolidated statement, you will do the consolidated. If they ask you to analyze business unit, is the business unit you are going to use. So whatever they ask you to do, that's what you are going to follow in that that report. Are we good to go now? Any other thing online? Don't worry. This case study is a D done already. Is a D done already. Just go and study, go and practice. I think we have covered everything we need to cover. Just go for that exam, and then we want to hear story. And when you pass case study, don't keep quiet. Oh, I know some people will not say we pass. That so you must tell us on the platform that you pass so that we also post it and then congratulate you. Okay. What do? I can't hear a thing. Maybe you not connect your mic. Oh. If you can't hear it means you not collect your mic. So online, are we all done? Are we all satisfied with our questions now? So can just demonstrate what I said.
Yes, sir, we are okay. We are okay now.
We are all satisfied. So let me just pause this recording so that I can position my camera. Okay, so this is how we run our normal class. For those who join our revision and our full students, they understand what we're saying. So they can see it directly from the board. Okay, so let's assume we want to do, so we are going to look at four scenario now. The first scenario is either you are going to analyze spicy financial statements, or they will give you industrial average. Industry average. Industry average is talking about other companies that are into confectionery limited. Confectionery products. Okay? It can be 2 companies or it can be 3 companies. Or probably they can give you other companies or whatever. They can give you division or divisional units. Divisional units. They can as well give you what again? They can give you geographical units. So this one will be involving Lagos. It'll be involving Lagos, it'll be involving Abuja and the likes. So as the case may be.
Yes, sir. They can also give company for merger and acquisition. For acquisition.
For acquisition, that is maybe yes, like Cowrie, or what do you, that name they call. So it means they're going to give you 2 companies or any which way. No matter how they give you, I'm coming. So no matter how they give you the financial statements, if you cannot calculate the trend, if it's difficult for you to get the trend analysis, leave the trend analysis. Do you understand? Or you can do the one of only spicy. Do you understand? If it's not difficult, if it's difficult for you to do the trend analysis for them, you can leave them alone. However, let's assume we want to do trend for this. Let's assume we have spicy company. We have T and K. And we have Y, S and Y. Let's assume that we are talking about the first one. That is, they gave us spicy and they gave us other 2 companies. I want to do their trend. Even if the time does not permit us, we can do like I can do it this way. I'll just make this one more spacious. T and K. So under here now, I can have 2021, 2022, 2023. Are you getting that now? I can do, this is here. It will be from the highest to the lowest. You will start from the 2023, 22, current year. Do you understand? So you can also say 2023, 2022, 2023, 2022. Do you understand? So if you want to start from revenue, if revenue here is what? It's like 20, this one is 15, this one is 25, this one is 15, this one is 30, this one is 35. So from here now, even if it is 2 years alone from that information, you can still calculate the trend analysis. You understand? So all you just have to do is to do the percentage here. So this minus this, that is 5. 5 divided by 15 is what? Multiply by 5%. Multiply by 100%. Whatever you get, put it here. You just put trend here. Then here you put percentage. Then here you can as well say, you can add another line here. So this minus this will be 5. Whatever you get, you put it here as percentage. Then here as well, whatever you get, you put it here as percentage. You are done with that trend. So you can just pick, because of time, you can just pick revenue, cost of sales, gross profit, and you can do profit before tax, and then net profits. It's okay. You don't need to waste your time much on that. So your calculation is working, and you're done. And you're done. So that is if you are working on this. If it is business unit, you can have Lagos, you can have Abuja, you can have others. Then you can have spicy as a whole. Yes. But you may not be able to take the whole 3 years. Even if you can do just 2 years. If you can just do 3 years, it's okay. I mean 2 years. The last 2 years. For you to know the trend between last year and this year. Yes. You know, they will only give you 1 year for spicy. But you know, we don't know anything about Lagos, Abuja, and others for now. But you can use the information they gave you. And don't forget, if they only give you 2 years here, it means you only calculate you years here too. Are we getting that now? So we just say difference between the 2 years, difference between this, difference between this, and you are go. We all know how to calculate the trend. So the difference between divided by the previous year. Exactly. New minus old over old multiplied by 100%. That is your trend analysis. So that is how you are going to do that. Now, this is if they are using geographical financial statement. They may decide not to use geographical. They can use division. So if they are using division, we can have manufacturing division, or we can call it division A. And they also have sales division or division B. Then you have spicy as a whole. Do you understand? That's another way you can go about it. After that, what again do we've talked about the industrial aspect of it. In what way? If they want to acquire, so don't forget. So I think we are done. What again do we mention? I think that's all we have mentioned. Okay.
Yes, sir, the way we will analyze it, if it's industry, spicy and another industry, if we analyze.
You just say spicy first. Then the other industry they gave you.
Summary and the report.
Okay, the way we are going to put it in our report, don't worry, I will talk about that. So we are done with this one now. This is appendix 1. So if you now want to,
sir, please, before you go ahead, this trend, are we going to put it this way, or we put the figures, that is the new minus old over old? Are we going to put the figures, or will they allow if we are just putting the answers like this?
Yes, you don't need to put formulas. Just put it like this. 2023, if it is 2 million, put 2 million. If it is 2022, if it is 15 million, put 15 million. Different between the two.
Sorry, sir. If I do from my calculator and I get 15 million, I should come and put that 15 million here.
It's not the absolute figure you are putting, no. Let's look at this. 2015. How much are we going to put here? Is it 500 we are going to put here? What are we going to put here? That is 500. 500 divided by 1.5. What is that? We have multiplied by 100%, Abby. So what we are going to put here is 33.3%. Percent is already at the top here. So this is the trend you are talking about.
Okay.
So we have vertical trend analysis. We have the horizontal. Do you understand? But you don't need that one. Just do this one and it's okay. So you don't need to put formula for this trend, okay? But make sure it's on the tabular form. So the next one, this is appendix 1.
But excuse me, sir. Excuse me, sir. Based on this trend. Hello, can you hear
Go,
me, sir?
go on with the question.
Okay, based on this trend, no, because we already have a 2021, 2020, is it not going to be the way the Excel you sent to us? I think we are just to follow the format.
Just follow the format now, but we are not sure how ICANN will come out. Do you understand? We are saying if they say you should analyze the ratios of spicy alone, you will use 2021, 2022, 2023, the way we have done it. That is if they say you should analyze spicy financial statements alone. But if they say they are giving you additional industry, you will do it this way. You will do spicy, you will do those industry they are going to give you. If they want you to do business unit, you will do the business unit per business unit. If it is geographical, you will do the Lagos, Abuja, the way they want you to do it. If it is per product, you will do the product 1, product 2, product 3. Anyhow they put it in the requirement, that's how you are going to analyze it for them. So we are done with that one now, trend analysis. The first one is performance analysis. This will now be appendix what? This will now be appendix 2. This will be what? Appendix 2. But make sure you write your full appendix 2. You will underline this. And then make sure it's in tabular format as well. It must be all your ratio, all your calculation, your ratio must be, analysis must be in tabular form. Yes, trend analysis. So let's assume again that they gave us, yes, this is ratio analysis. But in the question, they said performance analysis. So in this case now, let's assume they are giving us spicy and 2 other companies. So we are going to say ratios. Are we getting that now? If you like, you can bend your answer script to contain it. So we are going to have ratios. We are going to have formulas. You are going to have formulas. You are going to have workings. You understand? So for ratios, for formula, you can go back to my YouTube channel. We have done ratio there. So you will not take all these companies one by one. If you want to do just, if they're giving you 2 companies and they want you to analyze them, it might be taking time. So you can do the last 2 years to talk about it because of time issue. So you can do spicy. Under spicy, I would say 2023, 2022. Under T and T, 2023, 2022. Then X and S, I will do that one. Do you understand now? So under my ratios, what is the first thing I need to do? Because I'm talking about profit, I will just say profitability. So for profitability, which ratio am I talking about under profitability? Let's talk about gross profit margin. What is the formula? You put formula here. Gross profit over revenue multiplied by 100%. You will go to revenue of spicy. You can show only workings of spicy. The remaining one, just use your calculator to fill it up because you must manage your time. So under spicy, what is their revenue? Let's say they have 2,000. I mean, let's say the profit is 200. The revenue is how much? 5,000. Multiply by what? 100%. Whatever you get, you put it here for 2013. No. It's just an assumption. It's just an assumption. So let's say this is 7%. Let's say this is 5%. you will calculate the one of this one too. Let's say this one is 8%, this one is 5%, this one is 2%, this one is 3%. Do you understand now? And now another with it. So if you now look at it now, if you now want to talk, are we together? If you want to talk in your financial analysis when you are writing your report now, these are the figures you'll be referring to. Do you understand? So the increase, you can say spicy is not doing bad compared to T and T and what again? S and S. Do you understand? Because they are able to, they are at least they are doing fine in 2022 than T and spicy. Why they are a bit drop in 2023 compared to T and T. However, they are doing better than S and S in 2023.
Hello, are you there? Hello? Hello? Are you back?
I think it's the network.
Hello? Hello?
Network that is causing it.
I think network has logged him out. We're almost done already. I think he has done the justice.
Hello?
I can hear you. Let's continue. Okay, so if it is division per division, you will do division A, division B, spicy, and you put it that way. And I also explain how we can do that. If it is a business unit per unit, if it is Lagos, Abuja, spicy as a whole, and you are good to go. So once you are done with that, you do another ratio. If you are doing ROSI, you calculate your ROSI as well. You understand? But you don't need to. You can see that I'm not putting comments by the side here. I only put comments in that Excel sheet so that you know the purpose and how I've used those comments to write my report. So if you are writing comments, you waste your time on that day. Okay, so I think that is all we need to know about this. This is Appendix 2. So Appendix 3 now. We now be that investment appraiser. So the investment appraiser, so once you get to that one, just say appendix what? Appendix 3, but make sure you write appendix 3 in full, please. And don't forget to reference all your appendix back to what? Back to and don't forget to, I wanted to say something. Don't forget to reference all your appendix to report when you are writing body of report and executive summary. When you are talking about, when your report, anytime you are referring, whatever you are saying, if it's about what you have done, say see appendix 2, see appendix 1, see appendix 3, it will give you more mark. You understand? Okay, so so let's look at that investment appraisal, whatever the calculation. Though the calculation is already in that place, but if they are talking about what are they talking about, sir? If they are talking about the first one, diversification of product portfolio, so we can just try to analyze all the initial costs. See, even if you don't know what to do, if you don't know what to do, if they give you all the information, they give you cost, they give you revenue, you don't know what to do. You know what? Just try to analyze them. Analyze them. Analyze all the costs. Analyze the cost. Analyze the revenue. Analyze the profit. Analyze it. When I was doing, when I was writing the case study in the second one, when I passed, they gave us merger and acquisition. Is it merger and acquisition? Yes, merger and acquisition. They gave us merger and acquisition. So when they gave us merger and acquisition, the company want to acquire the other company. So they now gave information about that company, their board of directors, the shares they want to acquire. Do you understand? And they gave us the percentage of each shareholders in that place. And I don't know what exactly what to do, but I just say no wahala now. So I analyzed all the shares holders, the total shares they have, and the percentage of shares they are holding. And I noticed that one of the shareholders is having more than 51%. I say, oh, well, I have something to talk about. So according to the PR knowledge, and I'll bring it in, that this person will be having more than 51% shareholding in so company. As a result of this, it will give them significant influence. Yes or no? And other will not be able to make decision. I gave them the good part, I gave them the wrong part. I just left it like that. I went to the report and finished it. So the same thing, those who said they did not do business proposal at all, it's not that you will not do it at all. You will touch it. You will do something, minima, do the normal calculation you can do and leave it alone. And go and do your normal calculation in the reports, your full report. That's what they want. But you must say something about that business proposal. Because business proposal is requirement 2. So at least you must say something that is sensible in that requirement 2. And you cannot say anything without that simple calculations. Do you understand now? So initial costs will be how much? They want to buy equipment for option 1 now. We have 5 options proposal that you have. So option 1, they may likely want to buy the equipment. What is the equipment? What are the equipment you want to buy? So let's say equipment. Please mute your mic. What are the equipments? That they want to buy oven or baking cake or something. Let's look at that business proposal. Let's open that business proposal. It's first material
for ice cream. Ice cream.
Okay, so ice cream equipment, or less ice cream machine, Abby.
Yes.
Or whatever we put it. So ice cream machine. How much is that?
$100,000.
How much do we have in dollars? So $100,000. Then what again they want to buy as a machine?
Baking oven for cakes.
Okay, so baking oven. So it's also machine, or we don't need machine again. How much is that one? $50, Abby?
80,000.
$80,000. So they may want you to report this figure in naira. This is in dollars now. They may want you to report in dollars. They will give you exchange rate. So you will use that exchange rate to convert it to naira. So any other machine, any other equipment in that question? Another equipment?
Yes, equipment for sugar confectionery.
Okay, sugar
Confectionery. 70,000.
What page are you, boss?
The
It's
possible
from business proposal material.
Yeah, the business proposal. The first proposal.
Are we good to go now? That's a diversification of product portfolio.
Of product
So
portfolio.
Is there any other material?
That's all for the equipment.
So it means we can add all this together. What do we get? That will be 180, 250. So 250 is the total initial cost of the machine. So the first cost we have there, research and development are not initial cost. So we cannot discount those ones. We cannot discount variable cost as well. Do you understand? So if you go back to what we have done in class, that calculation we did for last diet, you can as well go to last diet, the way they solve that calculation. That will also give you an idea of what is likely to happen. Do you understand now? So this one now will not be what do we have here? Cash flow, discounted factor, then PV. Are we good to go now? So in year zero, this is what they are going to spend in year zero. So that will be $250. So they are going to give you discounted factor or capital cost of capital. If they did not give you, you will use that. So let's assume it's 10%. Yeah, so year zero is going to be 1, Abby. So it means we are still going to have, this one will be in jackets. 250,000 jackets. So do you understand now? Then the revenue that is going to give us for how many years? Is there any years we have in that question? Do you have anything like years? So we can assume it's going to be like 5 years. They are going to say it in the question. So if it is 1 to 5 years, how much is the total revenue they are going to have for the whole year? 900. That 900,000, if it's going to stable for the whole year, do you understand? If it's going to stable for the whole year, but if it's not going to be stable for the whole year, it means year 1, year 2, year 1, year 2, year 3, year 4. They will give you what they are going to get in each year. Do you understand? So they're going to give you what they're going to get in each year. Probably it's going to be 50, it's going to be 20,000, 50,000, it's going to be 70,000. They say it will be increasing yearly, Abby. So it means if you know what it's going to get for the first year, then you will continue to increase it 50%, 50%, 50% for the whole year. But it's going to be just, they said the revenue is going to be for 5 years. It's 900. Just use 900. Year 1 to 5, 900. Then you discount it based on, if you are using this one, you are using annuity formula, which is 1 minus 1 plus R raised to power minus N over R. So that is if you are using this 1 to 5 annuity. But if you are using 1, 2, 3, 4, 5 listing like this, it means you are going to use 1 plus R raised to power minus N. You use this to discount each year. Just go back to your PM, you are good to go. So that is how you are going to calculate this till you get to the final year. So when you are now done, when you are done, don't forget, because let's get this now. You know, we have done the initial outlay. What you are bringing here should not be revenue. It should be difference between revenue and variable cost. Net cash flow. Thank you. Do you understand now? So the year one is the normal cost you are going to have. But what you are going to have here as net cash flow is going to be revenue for year 1 to 5. Let's say that one is 900. You will now calculate all the variable costs from year 1 to 5 costs. Variable costs from year 1 to 5. Let's say that one is how much? Let's say that one is 500. So it means what you're supposed to be having here is how much? Is 400. If they also give you cost year by year, you will do revenue per year minus cost per year. The what you are going to get is going to be net cash flow. You now be bringing net cash flow here and discount it to get net present value. So whatever you are going to get at the end, when you get your net present value, whatever you are going to get here, if it is positive or negative, is what you are going to state in your report. That this report, if there is tax, yes, if there is tax, okay, they mentioned tax. Tax effect. Do you understand? Mr. Willie has taught you that now. So that should not be a problem. You also attended SFM. Okay, past FM. So which one do you attend? Which class do you attend? For which tax? Okay. Okay. Okay, Sarah is gone. So do you understand now? Just go and review tax, investment appraiser with tax. Okay, your question. You can write whatever they want, they will give you. This one can be, you know, this question we are solving is diversification of products portfolio. Oh, just put it like this. So it means, you know, the proposal, the heading of that proposal is diversification of product portfolio. Just put as the heading. So calculation you are doing here is under this diversification. Then if you want to do the second one, maybe they gave you that too as your business proposal. The second one, I now say expansion. Yeah, that will be appendix 4. It will be expansion of market distribution channel. You will not do the calculation as well. Then you get your MPV as well. Okay. They will always give you, yes. So that they will have 2 options. Which one are they going for? Because if they give you one, automatically they have to go for it. Online, are we good to go? Have I been able to
Yes, ma'am.
attend all the questions? Okay. Practice make perfect. I hope Madam Rita is still in this class. Oh. Let me check her. Rita did it. But she's not asking questions. Rita is there. You are not talking. This one that are not talking. Say something. Let me hear you.
They have asked all the questions. Yes, sir.
Are you okay?
It's because they have asked all the questions that I'm supposed to ask. So it's just to go and practice, like you said.
Okay. So go and practice, and everybody should just practice. I believe other people are okay with it as well. If you still have questions, you can drop it on our normal chats.
Okay,
we attend to
sir.
it. Okay.
Hello. Okay.
Hello, ma. How can you?
Okay, calculating this diversification that we use now, we only use equipment to calculate for the MPV. What other things do you think we can also add if we were giving such?
In this question,
for
we
the
not use
initial
only.
outlay.
Okay, for initial outlay, anything that is fixed.
Okay.
Investment. You know why I'm talking about investment? That it can last more than 1 year. So you can see this machine It's an investment into that. That is why we are using that initial appeal. That is what they are going to use to start the project. But variable cost is something that will be happening as they go by, and it will be related to how many they are going to produce. So that is why for you to not get inflow, it will be revenue minus other costs, all other costs in that question. Do you understand? Except a research and development. Research and development is some cost, so we will not consider it in our investment appraisal. Then if there's anything like a fixed cost as well, we will not consider it as our, it's only relevant costing we are using here. Only relevant costing techniques, that's what we are using here. Are we good now? Just study
Yes, sir.
other proposal. Yes, study all the proposal. Yes, sir. And with you, any question? Are we good to go? So I can bet you we have done fantastically well with this case study. All you just have to do is to practice. Don't be in panic, don't be panic or whatever. Go and sit down, enter the exam all majestically. I think this is my best year analyzing case study. Seriously, I can see that whatever is coming, you're going to see.
Yes, so yes.
So don't worry. Just go and practice more and more.
Hello.
Okay.
I agree with you, sir.
Okay, go on.
You said you mentioned some cost that is relevant, and you said the fixed cost aspect of it is not relevant. What of if you are given incremental fixed cost?
Of course, incremental fixed cost is relevant.
Okay, sir. I don't know.
Incremental fixed cost is relevant. That is, if they go for this project, their fixed cost is going to increase to this. So the difference is relevant. But if they say for going for this project, the rents which they have been paying for the five years is 1 million naira, that one is not relevant. Either they go for project or not, they will still pay the 1 million naira. So it's irrelevant. So I want to see your testimony, sharing with us on our platform. After that will be in June when they release their results.
Amen. We clip that.
Yes, sir.
Thank you, sir.
Amen.
Amen. In Jesus' name. Thank you.
All right, ma. So we can still continue our conversation on the group chat. I had issue with lightning and I just joined back. Kindly share the recorded videos after class. Okay, we will try. All right, so let's have a nice day and enjoy our weekend.
Yeah, thank you, sir. I really appreciate.
Thank you, Mr. James. Thank you for your time.
All right, sir.
God bless you.
All right, sir. Amen, sir.